A very good morning, ladies and gentlemen. We're not about to start yet. I've just come to tell you that there is going to be a slight bit of delay. We're expecting the minister to join us for the keynote. So, in about 15 minutes from now, we will start. Please excuse us. And I'm sure all of you know the traffic of Accra today. Yeah? Thank you so much. And I would also like to request all of you, please, if you could join us for coffee, tea, just a quick one. Thank you. Good morning. I will only proceed if I get the same sound back. A very good morning. A little more energy. Let's do it. A very good morning. My name is Mohammed Tawfiq. I'm actually the Deputy CEO with the International Center for Strategic Alliances. Today is actually a very, very special day for us. I'm not sure. I think a couple of similar faces in the audience, people that we've seen from the very, very first edition of this particular conference. Just to begin with, the International Center for Strategic Alliances is recognized for the conferences that we organize across the globe. To begin with, from the African continent, we started the 25th edition Connected Banking Summit Innovation and Excellence Awards. I must tell you, 25th edition started in Ghana. What I mean by that is the very first edition of this particular conference happened in Accra. And from Accra, we've gone around the world. Kenya, Nigeria, Burkina Faso, Togo, Saudi Arabia, Ethiopia, Oman, Turkey, and after 8 times doing the same conference here, we're back to Accra. So first of all, this itself is very, very special because it's happening here in Accra. I'd like all of you to please give a big round of applause to what the BFSI sector has done within the region here, especially in the last 9 years that we've been coming to Accra. What I have noticed is, of course, over the course of the last 9 years, Ghana became the first or the only country to have achieved 100% financial inclusion. With that as a driver, I think, the leaders, the regulators, the regulatory frameworks that are being formed, which are, of course, in favor to the end customer. I think there's a lot that will be discussed throughout the day, but what I am here to say today is, first of all, thank you very much. Thank you for making it here. Most of you are C-suite executives, heads of departments, people who run several departments in the largest banks of this country. Taking time off of your busy schedule is not easy, of course, and yet you choose to do that. You come here with wanting to contribute to the industry, with the thirst for the knowledge that the speakers are going to be sharing. I must tell you, sourcing the speakers everywhere across the continent is a little challenging. But when it comes to Ghana, we get people reaching out to us and saying, "Hey, Mohammed, I'd like to speak." Right? And that's not easy with the experts who have 30 plus years of experience, who are willing and able to come to share their knowledge that they've acquired over decades of experience. At the International Center for Strategic Alliances, the mission statement is connect, integrate, and transform. This being one of the most special moments for us, 25 editions, it's not just a milestone. It's basically a statement of continuity, credibility, and of course, commitment to the global BFSI sector. And since it started in Ghana, back then it was called the Ghana Digital Banking Summit. From the Ghana Digital Banking Summit, it became the Africa Digital Banking Summit. Of course, it was Nigeria Digital Banking Summit, Rwanda Digital Banking Summit, and that has today aspired to become what is called the Connected Banking Summit. I'd like to take this opportunity to also thank each and every stakeholder involved, starting with the speakers, of course, with the ocean of wealth that, the knowledge that you bring together. And you come here to share with the delegates from experience, case studies, success stories. It's not easy, that people are willing to share what has worked for them with everybody else. So thank you so much. And I'd like to, of course, thank the delegates, like I said, uh, in the search of the knowledge or just to network with the folks from the industry, learn from the experts that are presenting, whatever may be the case, you've left a comfortable day inside the office and come here. In So I'd like to thank you for that. Of course, the media partners, would like to thank you for joining us. Most importantly, the sponsors, without whom a conference is generally not a possibility at all. So I'd like to take this opportunity to thank Zen Show, our gold sponsor, thank Tunes, our gold sponsor, and thank our banking partners, Prudential Bank and Fidelity Bank, and most importantly, our gold sponsor, Brick Software. Above all, I think this thank you very much goes to my team that has consistently, for over the last 25 editions, works toward making this event a huge success. So I'd like to take this opportunity to thank my team as well. And just so all of you know, to set the stage, the chairperson for the event is Dr. Gillian Hammer. Now, Dr. Gillian Hammer is the founder for GradePoint AI. GradePoint AI, and also Chief Marketing Officer for IR Data. Just to give you a quick background, I'm of course going to let Gillian introduce herself, but Gillian is somebody that has been associated with this event from day one. Gillian was the chairwoman of this event in 2018 and has been the chairwoman of this event since. And I think it is her conviction, her want to contribute to the industry that brings Gillian here year on a year. And not just that, in terms of her contribution to the industry, we've seen Gillian help shape the BFSI sector in Accra. Ladies and gentlemen, may I please request all of you to give a huge round of applause to Gillian Hammer. Gillian, if you could please join us on the stage. Yeah.
Sorry, I thought this said like this. Give me 1 minute.
Welcome, and the stage is all yours.
Thank you, Mohammed. Good morning, everyone. How are we? Good morning, everyone. How are we? Did we eat breakfast? No? Are we hungry? Are we tired? Okay. Are we ready to learn something new? Clearly, some of us are still asleep. So, morning, everyone. Oh, let me see your hands. Oh, what time is it? It's 9:30. Some more excitement. It is a pleasure to be here once again. And as Mohammed said, yes, I've been with them from the beginning. I didn't realize it was so far back, but there are times when you meet people and you see what they're doing, and to the extent that you can help, you do your best to help. And so it's been a pleasure partnering with ICSA over the last 8 years, and very happy to be doing it again today. So we are here because we want to learn, we want to make a difference. And before I give my small speech, I do have a question for each of you. So we're in the age of AI. I think we're being blasted with it from every direction. Many of us are at different stages, and I want to get a sense of where we are in this room. So let me see your hands if in your organization You are currently just talking about the use of AI. Talking, like you haven't done anything yet. You're at the talking stage, the discussing stage. Let me see by show of hands. Oh, are we afraid to raise our hands? Okay, let me see who is at the stage of piloting something. I see 1, 2, 3, 4. 4 hands, 5 hands. Wow, okay. Let me see who is at the stage of having already implemented at least one thing, at least one AI initiative. 1, 2, 3, the same hands. Okay, I see about 10 hands. But there are so many of us in this room. So let me then check one more thing. Who is, okay, you may not want to answer. Let me tell you a story. Last week, I was talking to someone. He was in IT for a financial services company. And he was complaining that his CEO is actually still forcibly resisting the implementation of any AI initiative in the organization. And I feel like some of us are still at that stage because I remember I was talking to a lady. She was head of operations, and she was like, Jillian, so you are now with this AI trend. And that was her position, that it's a trend, it's a fad. And so we have the choice to opt in or opt out, and there are no consequences for opting out. But there's a particular quote that I like, and hopefully a few people in here will know. So I'll say it, and then I'll see if you can fill in the blank. So it says, "In a world of constant change, the greatest risk is," who can tell me what it is? So in a world of constant change, the greatest risk is what? We don't know. Pardon me? Okay, not taking a risk and staying as you are. That's one answer. Thank you. Anybody else has another opinion? Yes. Not following the change. Thank you. Anyone else? Let me say the quote again. In a world of constant change, the greatest risk is change. True. Well, here's what it says. The greatest risk is standing still. And I learned that thing many, many years ago because sometimes we hold on to the status quo and we feel that if we stand still, it's okay. But it isn't. There's actually a cost to standing still. And let me give you a couple examples. For example, it will cost you with your employees. Because if your employees look around, everybody is advancing, you are standing still, they will look for other opportunities. They will look at going to companies that are more forward facing. It will cost you for your customers. Because if you stand still and you say, I don't want to innovate in this direction. So practical example. Let's say that when a customer comes into the bank, it takes 10 minutes for you to serve them. And you decide that they're not complaining, so I don't need to improve. But your competitors decide that they will move. And so when your customer goes to another competitor, it takes them 5 minutes. Just by you standing still, you are now behind. So there is no way and no time that standing still pays off. And that is my message for you today, where we are in a time that change is happening. Change is rapid. We may not always understand it. We may be somewhat overwhelmed by it. But the one thing that we cannot do is to stand still, because standing still costs. So if anybody here is secretly standing still, please, after today, move. So that was my intro. So now let me give you my proper talk. And so it is my pleasure to welcome you all to the 25th edition of the Connected Banking Summit. It is a massive milestone, and I would like to give the entire ICSA team a round of applause. Okay. I would also like to thank the organizers, and I would like to thank the sponsors. You are all amazing, and it's because of you why we are here today. You are going to hear lots and lots about different topics, everything from building resilience, AI, cybersecurity, embedded finance, which I'm not really sure what that is, but new operating models. You will hear lots. My challenge for everybody today is, in the spirit of not standing still, take something, even one thing, and choose to innovate in some way that will help push your company forward, that will help push your industry forward, and that will help push Ghana forward on a digital level. So let us not come here and just sit and be spoken to. Let us actually take something from this, and then let's make a change. So thank you all very much. We now have a dance troupe that we are going to welcome ahead of the minister. I'm checking to see if they're ready. Are you guys ready? So we'll give them a minute to get set up. And I'll wait for them to let me know. So when you're when you're ready, hit the drum like, are you ready? Okay. So I think they're almost ready, but we will have the dance troupe, and then following that, as Mohammed mentioned earlier, we will have the Honorable Minister here as well. So thank you all very, very much. What are we going to do? So now let me say the quote one more time before they start. In a world of constant change, the greatest risk is, and we will not. Thank you very much. Welcome and good morning. Okay. All right.
Salariba, Oya Jadole Mama, Obaya Esawa. Ola Salariba, Salariba, Oya Jadole Mama, Obaya Esawa. Oh, Saria, Salariba, What I say, I go. What I say, I go. Sadaki, what I say. For the way you have done, oh, what I say, I go. Baba, what I say, I go. What I say, I go. Sadaki, what I say. For the way you have done, oh, what I say, I go. Oh, what I say, I go. What I say, I go. Sadaki, what I say. For the way you have done, oh, what I show, I go. Mama, what I say, I go. What I say, I go. Sadati, what I say. For the way you have done, oh, what I say, I go. Hey, Sadati, la dimonesa. Sadati, la dimonesa, la walele. Hey, Jaga, la dimonesa, na lele. Hey, Jaga, la dimonesa, na lele. Shenane, hey, como voye. Hey, como voye. Hey, obe mami, obe papa, eh. Hey, obe mami, obe papa, eh. Hey, obe ngamu, obe siti. Hey, onife wa bayo, eh. Hey, onife wa bayo, eh. Hey, como voye. Hey, como voye.
Hello, can you hear me? Okay, so we are going to have to do a slight change on the agenda, but to respect everyone's time, we'll keep the program going. So when the Honorable Minister comes, then he will follow, but we will switch things around and invite Dr. Philip Oti Mensah to come and give his talk. But before he comes, let me just tell you a little bit about him. So Dr. Oti Mensah is a transformational banking executive with over 20 years of leadership experience across Africa in banking and development finance. As CEO of UMB, he is driving strategic transformation focused on digital innovation, operational excellence, and customer-centric growth. He has held senior roles including Executive Director and COO of Omni BSIC Bank, CEO of Omnibank and Union Savings and Loans, Deputy CEO of ProCredit Ghana, and consultant for Finca Bank Tanzania. He's a fellow of CIMA and certified international change manager. He's a respected international speaker on leadership, digital transformation, and financial inclusion. Today, he is speaking about on the topic of beyond apps. Yep. How human relationships power digital banking growth. So I would like to invite him up at this time. Thank you very much. Let's give him a warm round of applause as we welcome him. Thank you.
Thank you. Good morning. Every time I go to such events, after the introduction, I get a bit scared if I can live up to the hype. But I have a lot to share today. Anytime we come to this platform, I always participate in this program for the past, so many years. And anytime we come here, we try to set the tone for, us to rethink and look at the things we do every day and see if we can look into the future and do things a bit differently. Today, I'll be talking to you about beyond apps, how human intervention can improve, digital banking success. And this conversation it's not different from, for example, asking whether EVs, that's electronic vehicles, will replace the combustion engine, or whether younger people will replace older people on the job. These are conversations we need to have. When it comes to digital banking, I think that it is not secret. This is my outline. I'll go straight to the first slide. It is not a secret that everybody is talking about digital banking being the next big thing in banking. In fact, sometimes people will ask you, will you still open branches? Are branches necessary? As executive, we discuss this and we ask ourselves, are we going to completely leave the brick and mortar and the human intervention and go straight to digital? Or are we going to have a mix of the two? So this first slide definitely shows, on the left side here, shows the history of digital banking. I won't bore you with that. It just shows here that somewhere in the 1950s, we had the first credit card. And then in the 60s, ATMs were introduced. Then in the 70s, we had the first electronic payment system developed. And then online banking became popular in the 80s. And we all know PayPal also emerged in the 90s. Then in the 20s, we had mobile banking, of course, getting inspiration from PayPal, became popular. And then Google introduced mobile wallets, and the rest is history. Mobile wallets everywhere now. And then in around 2015, we had fingerprint authentication, a bit more sophisticated form of digital banking. But today we are talking about AI. Okay, and the graph here shows that definitely projected to about 2028, we are looking at about $19 billion in digital banking transactions. So definitely it's not a secret. Everybody knows that digital banking will grow. But the question is, can we do more? So this next slide shows that in sub-Saharan Africa, digital banks have been growing exponentially. So out of the about 850 banks in Africa, in sub-Saharan Africa, as of 2021, about 21 of them were full digital banks. Okay, and I think that the number is even too small for Africa, but it just shows that it's growing. And if you go to India, for example, neobanks. A neobank is the same as a digital bank. Okay, it's a bank that primarily uses digital for banking, and then maybe adds human influence as a secondary element. You can see that in India, it's projected there will be about 60 neobanks by 2027. Okay, India has a population of about 1.4 billion, so I think the number is even too small, but you can see growth. The next slide. Okay, just to still confirm the point we are making, or I'm making, that even banks that are not neobanks are very aggressively transforming. Today, the buzzword today is digital transformation in every bank. I have it in my bank everywhere. But what does it really mean? Okay. You can see that most banks are digitally transforming. Okay. The number of banks that are transforming between 50 to 74% are more than 30. Okay. And then over 75% transformation, we are looking at around 27 thereabout. Okay. So a lot of banks are digitally transforming. If you look at the graph on the right side, the areas where banks are digitally transforming are corporate and business banking, SME banking, retail banking. But you can see that the focus is largely on retail banking. So it means that a large number of customers are on digital banking platforms. Yes, that'll be better. Yes. Thank you very much. Thank you. I prefer this thing. All right. So let's go to the next slide. Okay. So this slide is also just to emphasize again that CEOs in Africa, in banks in Africa, are saying that it's all about digital. It's saying banks in Africa, go digital or die. Okay, so banks are investing heavily. You can see on the right side, banks, 94% of bank CEOs are saying transformation is one of the three most important things they want to do when it comes to strategy. Another 42% are saying that providing better banking services is their priority through digital innovation. And then 79%, almost 80% are saying that their banks use some form of third party to help when it comes to digitization. Okay. So now we've laid the foundation. Okay. Now, moving forward, we're asking ourselves, are we really transforming fully to digital, or is there the need for human element or human intervention? Now, the graph here shows that when it comes to information, so all the bars in gray, light gray and in deep gray, or the one in black, are looking at in-branch service and then also using some form of contact center. And you can see that in almost every area when it comes to information, transaction, product activation, advisory services, the customers are saying that it's not all about mobile apps and online banking. They prefer being in the branch. They prefer interacting with humans. Okay, so you can see from the graphs. And on the right side, you can see that the 43% are people who want to use basic digital banking services to pay bills, like most people do, okay? But then there's about 57% of the people, the rest of the people are saying that they don't just want to use the apps, they want to interact. So some are saying, the 29% are saying intelligent solutions to help them reach their life goals. And this is definitely not an digital only or AI only requirement. 22% are saying accurate recommendations for budgeting and saving. Okay, and about 6% are saying a bank that gives back. Okay, so there are definitely more people who prefer not just the apps, but they want to talk to humans. Okay, so let's do a bit of theory, then we come to our conclusions. So there's core insight, a core idea here is that the assumption, as I said earlier, is that let us go digital, customers will automatically adopt. Okay, but the reality is that customers adopt digital platforms only when they feel safe, understood, and fully supported through their journey. That digital platforms are fundamentally trust products. Okay, they are not technology, they are trust products first of all, and they are psychological first and digital second. Okay, so let's continue with the theory. So these are two theories that support the conversation. The first one is loss aversion. So if you bring it to practical terms, even if you are offered someone to come to your house and pick your money to deposit for you every day at the bank, it's very convenient. But you always ask the question, can I trust this person? You always want to check. So we are saying here that convenience on digital platforms is not necessarily making people satisfied. They choose first trust and confidence before convenience. The second theory is saying that when there's ambiguity, lack of clarity, which is mostly found on the platforms only, then things don't necessarily work the way we expect. Okay, so moving on. It's not working. Okay, so explain a bit further. So there are, three more theories to share. I'll go through this quickly. So there's a loss aversion, as I said, that people don't want to lose. People don't want to lose money at all on these digital platforms. And therefore, they would rather go to the branch to see humans. I've spoken about ambiguity and then the accountability psychology. So when you are standing in front of a Momo vendor, okay, so those of you who don't understand Momo, is the mobile money vendor, you feel safer than when you are only on the digital. Okay, so some of the fear drivers for customers: losing money, as I said, fraud and scams, wrong decisions, pressing the wrong button and losing money. Okay, and then bank abandonment. So you being on a platform and feeling that if something goes wrong, there's no one to talk to, can prevent you from using the platform. Okay, so a bit more about the loss aversion when it comes to fraud. As we all know, there are reports every day, almost every day, about people losing money on the mobile money platforms. There are common threats like the OTP scams, social engineering, impersonation, and sometimes there's also behavioral impact in society. Okay. Now, that's one thing that we are missing. And so we are coming to our conclusions now. Is the human infrastructure, which is the trust engine that banking forgot. Okay? And we'll show you examples in Africa of how the two have been combined to bring more success. So let's move on. We all know M-Pesa. Okay, so we don't need to belabor the point. M-Pesa is largely successful. And the success is driven by the fact that M-Pesa has over 600,000 agents across Africa. Okay, and basically that's how come people are comfortable to be on the platform, and it keeps growing. Okay, let's look at our own system here in Ghana, what we call the mobile money. Okay, here you are looking at 80 million plus registered accounts. About 26 million of them are active users, and 4.5 trillion annual value. Okay, and why is this happening? It's happening because of the human intervention. And this is proven by the fact that banks have apps, including my bank, but the sign up is really low. If you check, the sign up is really low. Banks are hardly making good profit on mobile apps. Of course, investing a lot in the space. Okay, so the agent factor wins all the time. This is to emphasize. Now, there's one more example I want to share. There's a bank in South Africa called Time Bank. Okay, so this bank basically came into the banking sector of South Africa barely 10 years ago, and as of today, they have more than 10 million users. More than 10 million. I don't think, the last time I checked, I don't think that I've seen any bank with over 1 million users. Okay, but they got 10 million in less than 10 years. And this is great. And how did they achieve that? They achieved that by having digital only. They have no branches. They only signed an agreement with Pick and Pay, and they have their yellow kiosks in Pick and Pay shops. Customers are shopping and banking. So they find more or less the bank branch inside the shop is in their comfort zone. They are doing transactions, they are opening accounts, and they are growing and making profit. Almost the #1 bank in South Africa now in terms of number of customers. Okay, and here, this graph here, so there was a survey where customers of Time Banks were asked, could they easily find a good alternative bank to Time Bank? And most of them said no. They like the bank. Okay, they don't necessarily like the brick and mortar. They like the simple digital, but they also like the human intervention. 67% of them say no. 18% said I don't know, and 7.9% said maybe. I think that from maybe to don't know, they all like Time Bank. Okay, only 8% said they have an alternative. So this shows how people really like this model. Okay. It's not working. Okay. So here, this is just to prove the point here that Time Bank only started as a fintech in 2012. In 2017, they got the bank license. So only about 5 years of learning, they became a bank. and today they are the biggest bank when it comes to customers. Okay, good. All right, so 4 more points, then we wrap up. Okay, so again, the case study of Time Bank shows a digital bank that trusts humans to drive the adoption. So no platform is open, no account is opened without human intervention when it comes to Time Bank. Nobody's allowed to sit in the house on their own to try to open an account. They always do it with human intervention. That's why they're successful. They are successful. If you bring it to our system here, most people will think, send them the link, let them open the account. Most people will tell you the convenience of sitting in your home and opening an account is the best. But the information here shows that it's not the case. Okay? The second point here is that the high-tech, high-touch model. Okay, so it's a good combination of high-tech and high-touch. Okay, so I don't need to explain that further. And then here it says that human intervention during onboarding. I mentioned that already. Okay, and then finally, the security, customer confidence, and human presence reduces anxiety. We've already spoken about that in our theories. Okay, so summary. We're saying that the winning African banking model is not purely digital and not purely traditional. That it is assisted digital banking where technology provides the convenience and humans provide the confidence. Thank you.
Can we appreciate him again, please? Thank you. So before I release him, I do have a certificate of appreciation. So just come into the middle. And then, so it says Certificate of Appreciation, proudly presented to Dr. Philip Oti-Mensah for sharing your valuable knowledge as a speaker. We thank you. Oh, where are our hands? Let's give him another round of applause. Thank you. Okay, so we will. Okay, so I'm told that the minister just arrived, so we'll just give him 2 minutes to get in and get settled. And so maybe what I'll share based on what I took from this talk is that no matter how we innovate, trust is always essential. And we always have to make sure that trust is baked into whatever we are doing. And one of the interesting things, and maybe I'll just poll the audience quickly, but for me, trust is not measured in the same way globally. Like different countries respond differently to trust, or they have different markers that make them feel trusted. So I just wanted to get a sense of, as we are innovating, as we are saying, we have to move, we have to go digital, we can't stand still. But at the same time, we need to make sure that our customers can still trust the solutions that we're doing. What are some of the ways that you are making sure that people can trust what you're doing? I'd love to hear, and I'd love to hear from different people, because I want to get a sense of what are we doing? Are we doing the right things? Or are we doing what we feel like? Sometimes, companies tend to do what they feel like and not what the customer actually wants. So how are we measuring trust? And I will start with, you can come for the mic.
Thank you. Actually, I believe that building a real trust is when you're not trying to put some mask, you're not trying to pretend, and you're quite honest. Like both sides of communication should be honest, should be real, and that really build trust. When, for example, you are speaking with some financial institution like a client, and you see that they are not just dull people in dull suits, but they are having like maybe kind of game that it's interesting for them to provide services for you, that you are the part of this process and you both are having benefits from this collaboration. That builds real trust and real love. Thank you.
Let's give him a round of applause for at least giving his 2 cents. And we'll continue the conversation later. But at this time, it is my pleasure to welcome the Honorable Minister, Samuel Narte George. He is, as most of us know, the Minister of Communications, or he's the head of the Ministry of Communication, Digital Technology, and Innovations. Do you have an acronym for it, or do you say it in full every single time? Okay. Okay, thank you. Okay, cool. But I would like to introduce him to give us a talk, and I'll tell you very briefly about him, and I'll read his profile, though I believe practically everybody in this room knows who he is. But he is a third-term member of Ghana's parliament and Ghana's minister, as I said, for communication, digital technology, and innovations. He holds his MSc in International Strategy and diploma from the London School of Economics, an MA in Conflict, Peace and Security from the Kofi Annan International Peacekeeping Training Center, and an LLB from the University of London, and a BSc in Agricultural Engineering from KNUST. Well done. He also holds professional certificates in multiple ICT disciplines, which probably made him really well suited for this role. He previously served as Assistant Director in the Head of Civil Service Office in Ghana, and later as Communications Specialist at the Presidency of the Republic of Ghana. He has served on the governing board of the National Information Technology Agency and as a commissioner on the National Media Commission. He is a member of the Security and Intelligence, Ethics and Standards, and the Constitutional and Legal Affairs Committees in Ghana's National Parliament. He is also the immediate past secretary of the African Parliamentary Network on Internet and Governance. Today, he is here to set the tone for this event, and I ask everyone, please stand, let's welcome him to the stage. Thank you very much. Good morning. How are you?
I should use this. Okay. No, I'm just gonna. Sure. Please be seated. A very good morning to everyone in the room. It's a pleasure to join you this morning. It looks like I need to let them edit my profile. It looks like people think I'm a nerd. I keep studying. Just 2 days ago, I got my latest degree as well, a master's in law from the University of Laws. So we keep learning because it's the only way we can keep improving. But ladies and gentlemen, chairperson, distinguished participants, esteemed guests, all protocols duly observed. I respect everyone in the room. It's an honor to join you this morning as the guest of honor at the 25th Silver Jubilee edition of the Connected Banking Summit and Innovations and Excellence Awards. I thank the International Center for Strategic Alliances for the invitation, and more importantly, for sustaining this platform for 25 years. Longevity like this does not happen by chance. It reflects relevance, credibility, and the ability to evolve with changing times. Excuse me. It's also fitting that this milestone edition is taking place here in Accra. Ghana has played and continues to play a significant role in Africa's financial and digital journey.
From financial sector reforms to mobile money leadership and regulatory innovation, our country has often served as a testing ground for ideas that later scale across the continent. Today, under the leadership of His Excellency President John Dramani Mahama, Ghana is entering a renewed phase of national development. This phase is grounded in a clear understanding that digital transformation is no longer an option for us. Technology must be deliberately aligned with economic sovereignty, social inclusion, and national resilience. The government of Ghana is firm in its belief that digitalization must work for all and that innovation must lead to real improvements in our people's daily lives. The banking and financial services sector sits at the very center of this transformation. Finance is the bloodstream of development in any economy. When finance is weak, fragmented, or exclusionary, growth slows. But when it is resilient, when it is well-governed and inclusive, opportunities expand and blossom. Distinguished ladies and gentlemen, as we talk about next generation finance, we must be honest with ourselves. The future of banking in West Africa will not be secured by legacy systems with cosmetic upgrades. It will not be secured by innovation that prioritizes speed over stability or profit over trust. A financial system that lacks resilience will fail under pressure. A financial system that cannot scale will leave too many of our people behind. And one that is not customer-centric will eventually lose legitimacy, and trust, in the end, remains the true currency of banking. Next generation finance, as we refer to it, therefore, is not simply about faster payments or smarter applications. It's about rethinking the entire logic of finance itself. It requires us to ask ourselves very difficult but necessary questions. Who does the system truly serve? Who controls the infrastructure and the data that we generate? And who ultimately believes or benefits when innovation scales? If our financial systems do not deliberately include small businesses, women, young people, farmers, informal sector operators, and first-time users of formal finance, then we are not building the future. We're simply digitizing old inequalities. If we employ AI in our financial sector without including the deprived and underserved, then AI no longer means artificial intelligence, it rather means advancing inequalities. One important lesson that Ghana has learned is that strong private innovation depends on strong public digital infrastructure. Secure digital identity systems, interoperable payment solutions and platforms, trusted data governance frameworks, and clear regulatory rules are the foundation that sustain innovation. They reduce risk, they build confidence, and they create a level playing field for everyone. This is why under the Mahama administration, we're reaffirming our commitment to building digital public infrastructure that supports competition, protects consumers, and strengthens national capacity. Initiatives such as our Digital Exchange Hub are central to this vision. It will enable us to have secure and seamless data sharing across institutions while safeguarding privacy. Likewise, the forthcoming data harmonization bill, which I'm about to send to Parliament, will ensure consistency, trust, and accountability in the management of data across the financial ecosystem. And for those of you who operate in the Ghanaian ecosystem, finance ecosystem, you know that central to every banking operation today is the Ghana card. And so if we have siloed systems, the Ghana card runs under the NIA, which used to sit under my ministry, but now sits under the Ministry of Interior. If they build their silo systems and you as banks work with the regulator and build your own silo systems as well at the central bank, the Bank of Ghana, and these systems do not communicate, real-time KYC becomes impossible. Then we begin to exclude people who we should be able to offer solutions to. And so regulation in this context must be properly understood. Regulation is not the enemy of innovation. poor regulation is. In today's financial landscape, smart, adaptive, and forward-looking regulation is a strategic asset. Jurisdictions that protect consumers, secure data, enforce accountability, and preserve systemic stability attract long-term investments and credible partnerships. And that's why my ministry is working closely with the central bank to see how well we can fine-tune the multiple mandates that we have. Because we keep saying that our ministry as a digital tech ministry sits at the intersection of traditional banking and financial innovation, which is technology driven. But most of the banks get your, and financial service operators today get your licensing from the regulator, which is the Bank of Ghana. However, the policy direction that we are beginning to roll out at the ministry, it'll be important that we have synergies between the central bank and the ministry to ensure that there are no gray areas in our regulatory framework. Because regulatory arbitrage may offer short-term advantages, but it always comes with long-term cost, often paid by the citizens and our taxpayers. Our responsibility, therefore, is to ensure that regulation evolves alongside innovation, not just behind it. As finance becomes more digital, it also becomes more vulnerable. Cybersecurity is not just an IT issue anymore. It is an economic security issue. Data is no longer only a commercial asset, it is a strategic national resource. A single breach in one institution can quickly cascade across an entire financial system, eroding trust in a matter of hours. And that's why I've given clear directives to the Cybersecurity Authority under the ministry to begin to work closely with all banks in the ecosystem to ensure that you have the kind of resilience that we need. We're reviewing our critical national information infrastructure list, and for the banks that are not on that list, prepare. I'm going to be declaring you critical national information infrastructure, which means that you will need to upgrade your systems on the cybersecurity front. This reality calls for strong data protection regimes, greater local cybersecurity capacity, clear rules on cross-border data flows, and deeper regional cooperation on digital risk management. Financial resilience in West Africa cannot be built in isolation. Ghana cannot build on our own alone because most of our banks are interconnected across the sub-region. It must be collective, it must be coordinated, and it must be forward-looking. But at the heart of all of this that I have spoken about is the human being. Technology does not automatically create inclusion. Policy choices do. If innovation does not reduce the cost of credit, it does not shorten the distance to financial services, and it does not improve access for SMEs and empower the informal sector, then it has failed its most basic test. Customer-centric banking in West Africa must reflect the lived realities of our people. It must speak to traders in our market, farmers in rural communities, young entrepreneurs building digital startups, and the families that are seeking dignity and security through access to finance. No single country can build a globally competitive financial ecosystem on its own. Regional interoperability, regulatory dialogues, and shared systems and infrastructure are no longer aspirations. They are necessities. Finance must become a bridge to West Africa's integration and not a barrier. As we mark 25 years of the Connected Banking Summit, this milestone requires us not only to reflect, but also to take decisive action. I urge all stakeholders in the room here to renew your commitment to constructing financial systems that are intentionally resilient, they're purposefully scalable, and firmly rooted in trust. Let us collectively prioritize the advancement of innovation while ensuring that sovereignty, accountability, and inclusion remain central guiding principles. Now, today, is the time to actively collaborate and implement the necessary changes to shape a robust and inclusive financial future. The future of banking in West Africa will not be shaped solely by technology. It must be shaped by values. It must be shaped by governance and the courage to make the right choices, even when those choices are difficult. I commend the International Center for Strategic Alliances for convening this milestone edition and for recognizing excellence across the financial ecosystem. May this summit deliver commitments, real collaborations, and a lasting impact. Ghana stands ready, under the leadership of His Excellency President John Dramani Mahama, to work with all stakeholders to build a secure, inclusive, and future-ready financial ecosystem for West Africa. I thank you very much for your attention, and I wish you a productive and meaningful engagement. God bless you, God bless West Africa, and God bless our homeland, Ghana.
So please, let's give him another round of applause. Thank you. And you can go to the middle. Hang on. So let Mohammed talk. Yes, sorry.
We'd like to thank us and sharing, of course, what you began as saying, a lot of degrees, the knowledge that you've acquired over the years. I think Ghana, like you said, stands very tall when it comes to the strongest BFSI sector in the region, not just the continent, but globally, with financial inclusion being achieved. So I think congratulations and a lot of work to be done. Thank you for joining us.
Thank you.
Very grateful that you accepted the invitation.
No, it's a pleasure. We have to. Thank you.
Okay, thank you very much, everyone. Thank you, Minister Sam George. And as we give him space will you be staying with us for a bit, or you have another engagement? Okay, fantastic. So he'll sit with us just for a few minutes. But one of the things, I think there are maybe 3 quick things that I will share that I took from what he said. And one that I loved is that the future of banking will not be secured with legacy systems with cosmetic upgrades. And it's a struggle because a lot of big companies are struggling to actually really overhaul their systems the way it needs to be. Rather, we're spending time trying to put lipstick on things and dress it up, and that is not a sustainable solution. So I really appreciate that. I also appreciated him saying that we need to stop digitizing old inequalities. We do really need to make space for everyone in the financial services sector. So everything that we do, we should be asking ourselves, are we including everyone? To what extent are we including those that are not able to access what we do readily? And then the last thing is, having worked in investment banking for a long time, regulation does need to evolve alongside innovation. Too many times, and I mean, naturally, innovation moves ahead of regulation, but we do need the regulators to keep up and just help drive the economy. So thank you so much. Thank you. Now, it is my pleasure to introduce our next speaker, and I hope I will pronounce his name well, Yuvraj Kumar. He is a fintech and payments product leader with 18 years experience across cards, cross-border payments, digital wallets, and risk platforms. He is the Senior Principal Product Manager at Azentio Software, and he is actually here today to talk to us. Oops, sorry. Oh, you can come over. Okay, yes. So he's here today to talk to us about, sorry, my notes are down there. So he is actually going to tell you what he's going to talk to you about, but notwithstanding, my comment from this morning still stands, where we cannot afford to stand still. So make sure that anybody that comes up and talks, no matter what they say, take something from it and commit to doing something with it. So thank you so much for being a part of this. Over to you.
Thank you so much.
Good morning, everyone. It is truly privileged to be here in Accra. This is my first time in Africa, and among the great leaders who's shaping the future of Western African banking. And when we look at this region, right, so there is clear that something significant is happening. Western African is writing one of the dynamic banking story in the world right now, be it a mobile money adoption or digital onboarding or real-time payments or cross-border corridors, expanding across the economic communities of West African states. That's where we are here to talk about the connected banking, connected risk, right? So connectivity is always brings a risk within it. And we would like to talk about more on what it is looks in the future of 2026. What does the AML playbook look like in 2026 is the other thing that we wanted to look at it. And the real question is, are we not compliant? The question is, are we having effective monitoring systems? That's a question that it's popping up. Yeah, so let's look at it's not moving. Yeah, as I was saying, Western African, like we are in the very connected era of Western African banking. That connectivity is creating an opportunity as well as a risk. Be it a mobile money. So mobile first inclusion has transformed the access. The digital onboarding, millions of accounts are open through Nigeria and Ghana through mobile apps, USD, no branches, no face-to-face interaction. But the similar uh, frictionless experience, which is having a serious exposure, right? So if you look at Economic Financial Crime Commission have publicly exposed to the mule network recruitments, which is helping to create accounts, digital accounts. So the same in Ghana as well, where the SIM swaps as compromised to create a linked accounts. That is other thing which is having an exposure to it. When the growth comes, the risk is also following to it. And the next is about cross-border corridors. Cross-border payments is expanding across the ECOWAS, and the money moves from different like Ghana, Nigeria within hours, right? So the third-party partnership. So because they try to give an entry point for a mule networks or organized networks. And real-time payments, like money moves very fast, right? Be it Nigeria instant payment ecosystem or Ghana's mobile money infrastructure, the money moves within seconds, right? That brings another critical growth in the sector. Then virtual assets. So the crypto-linked payment accounts and the wallet to bank movements, that is already part of the ecosystem, right? So whatever you see in the slide, pretty much everything driving a growth, but it is also bringing a risk to it. So each one of these areas, it's bringing a risk, and that risk is the traditional defensive method. It's not going to help it. I don't know why slides are weird. Okay, so when banking connects, risk connects. So that is a core theme that we have today. So like it's not a coincidence, it is a cause and effect. So whenever we think about be it as a risk, so risk comes with a, cause of effects. So ultimately, there will be a damage would be expected in any of the growth that happens. The risk will always follow. So in financial crime, the money movements, like it's not slow anymore, right? So if you are thinking about our life cycle reviews or a batch monitoring reviews, that's not going to help. So transactions are uses at the same speed. Financial crime moves at the same speed as a transaction. Whenever you initiate a payment, the risk is already explored. It's already there. So the traditional monitoring of overnight batch monitoring runs, which is not going to help us. And mule networks, again, the millions of accounts which gets created, and the same frictionless boarding creates a serious damages to the system, and which will also involve a lot of other friction exposures. Also, this is a deeper issue in the region right now. And fraud and laundering. So fraud and laundering is not always a separate systems or separate platforms. So it has to be looked at together, right? So whenever today, I think most of the banks, like we have separate systems for fraud and separate for AML, the rules and other systems. Like pretty much we have everything siloed, right? So that is one of the risks that we are seeing in the future. And cross-border layering, yes. When it comes to money, be it like the commodities like gold, cocoa, oil, all these commodities moves across within Ghana, Nigeria, and other ECOWAS infrastructure, right? So the siloed system cannot able to see the full connection of it. We can see only part of transaction. Like if you look at only single transaction may not give you the full picture of it. So it has to be look at very wider. Basically, the trade-based money laundering activities also will involve that. And criminal networks. So criminal networks, like we know all the AML typologies or rules is what the patterns we have identified. But then the fraudsters or criminals, they try to explore what it is not. So what we don't know, that's what they try to explore. They try to see how they can break the system or test the onboarding thresholds and so on and so forth. So that's the other risk that we are talking. Okay, so whatever we have seen in the previous slide, it's more about what is when the growth comes, what are the risk follows. Now we want to look at it, what are the threats which is there. So when it comes to threat, let's take a look at cyber frauds, right? So in Ghana, in 2024 Q1, it is 2.4 million Ghanaian cedi, and it is increased to 14 million, like around 15 million in H1 2024. This is not a gradual growth, it's a sharp increase, right? So this threat is already there. And similarly, on the other one, where we have a regulatory side, from regulatory side, yes, the Basel index, I've told that I've given the report saying that, okay, 70% of African banks are like having their risk profile clear. But then that is not enough. Like they are raising the bar to make sure that we shouldn't have thinking about only the controls. It is more of like what will be the effectiveness. That is something is going to talk about. Okay, then the next point, again, another threat would be like shell companies. So shell companies and legal entities, we did not know the source of fund, like origin of funds for many of the companies. The companies may hide underneath, and the regulators are really wanted to know who are the actual beneficiary owners of these entities. That is one of the critical threat that we have in the region. And then again, virtual assets like crypto linked payments, it is already part of the regulatory perimeter. And this is one of the undetected topic that exists in the region, trade-based money laundering, where like they try to change like more of like a document overriding or invoice overriding or misplaced price. All these are like followed, like make sure they try to hide the trade-based money laundering. So traditional monitoring systems may not help to figure out these typical transaction flows. Okay, so everything that we have seen, it's more of like how the growth is there, then followed by risk, and now how it's getting accelerated, and what is the regulatory shift we are expecting. When it comes to regulation, yes, we have different topics which is there in the regulation. We want to look at one by one as well. So when it comes to national risk assessment, so national risk assessment, which is already validated all the negative things. So they mapped all the vulnerabilities. They know which are the high risk customers or which are the high risk entities, and as well as the channels. So all that is like they were expecting what the they were expecting no longer the risk should be. It is more of like how effective we wanted to make sure our controls that we're going to implement. Then the next point is about and GBUS mutual evaluation. So here, so we are moving from a state of what uh, what controls, like everything so far it is what documentations. When it comes to AML, like it's more of a documentation. Once a documentation is done, okay, we think that the policies we are compliant, policy is satisfied and we are compliant. So that is not what JIBA wants right now. They wanted to re-evaluate the controls. They wanted to check what the controls are really working, right? Whether the systems are really working, or how this new approaches is going to take it. They wanted to validate all the quality of report that we submit, like a suspicious transaction report, or be it a case resolutions. Like they wanted to validate everything to make sure that our systems are very effective in terms of how we're going to present it. And next thing is about over the last 5 years. So there are sharp increase in the agency banking, fintech partnerships, and this is one of the core focus area in regulatory radar. So this is already part of the core area which has to be really focused. And then same with the digital assets. Digital assets are already part of the perimeter, regulatory perimeter, which need to be addressed with a concern. Yeah, so it's the supervisors are more like when it comes to regulatory, the supervisors are more, they wanted to understand what is that we really wanted to verify it. Like instead of going by a policy, they wanted a performance-based solution and asking whether the control patterns are really operating well, whether it operates consistently or whether it is producing measurable outcomes and stand up the scrutiny. So the regulatory gaps lives in this risk, and what is exactly is written in the policy, whether the system have the same control. That is an expectation from the regulatory. And where traditional AML model breaks into the connected ecosystem. So the whatever you look at from a AML monitoring side, right? So be it, there are certain risk points that we have, starting with the data. So data today we have a like be it as separate channels. Like if a customer is being onboarded, whether it is a onboarding data, transaction data, or different product data, every other data which sits separately. So that is like a broken information. So you don't see the full picture of the information, which is not able to view the full chain of transaction. Let's say if someone is doing a transaction in a mobile app and someone is doing a bank account transaction, car transaction. So how do we correlate this information? The data become broken with the today's system that we have today. And then moving on to alert volumes. So this is one of the operation problem what we have today. So most of the banks or AML teams, we have seen that we have close to 80% of false positive, which is being recorded. Like it's an overload for the operations team to review and work on those cases. Like we have seen a lot of backlogs as well. Even in my previous concern, like where we have two dedicated teams for AML and fraud, they don't talk to each other, and lot of gaps. And wherever we have seen, like it's like the false positive rates are high. We were struggling to fill up those false positive ratios. Like by the rules can just trigger information. Like whatever we know, it's just going to trigger it. It's a threshold based rules. But that is something again why the traditional AML method is failing. And limited visibility. Yes, again, this is a topic that the data, what we have, we will be looking at a single transaction. So we don't see the full picture of transaction. We don't see the network connections and other parameters when it comes to boarding. We don't cross-check the information. So that is one of the gap that we have today. And manual case workflows. So today's systems, like we have a workflow, whenever it's a case gets created, it goes to 3 or 4 levels. Let's say, for example, be an analyst, then it moves to supervisor, and supervisor thinks that, okay, there is a suspicious transaction reporting is happening, then probably it may go to money laundering officer to do the next level. So the speed is not there. So it is like pretty much we are running in a human speed. And then control designed for periodic reviews. So today, our AML solutions are mostly on the control driven, where we run every quarter, annually, even the rules, like we don't update the rules on time. Like it's more of like we try to follow the governance, right? To make sure that, okay, it's a checklist, like if I fill the checklist, yes, I'm done with that. So that is what is the traditional model currently works upon. And then the major shift we need in 2026, the traditional models may not sufficient for the change that is happening across the region. So in the traditional model, yes, I was mentioning about periodic reviews. Like we have, like if it is a high risk customer, we'll say that, okay, after 3 months, we want to review this customer. If it is a low risk, maybe we put up at, okay, maybe 1 year later, we review the customers. So that periodic reviews as well as rule-based thresholds. So we have a threshold just trigger based on what we have written. It does not have any intelligence into it. And channel by monitoring, yes, we look at each channel separately. Everything was siloed, and manual escalation, and even the regulatory reporting. So when it comes to regulatory reporting, we just make sure that the fact of document we are recording. It's not that we are intuitively making things better. When it comes to modern module, so in the modern, so the detection must be near real time. So we have to act upon quickly in terms of when the financial crime happens, like near real time, we have to make an action to hold the funds, right? So we don't need to wait for the end of the day monitoring to happen. By the time the money would have already moved, right? So that is one thing we have to take in care. And of course, the scoring, right? The risk scoring. Whenever we assess a customer, right? So we have certain parameters where we look at the customers in terms of how do we classify them, whether it's a high risk or medium risk or low risk. So by classifying it, like it's not only about a defaulted value. We need to enrich the data to make sure that the customer being profiled properly, as well as we need to know the behavior of the customer, not only by single transaction. Even we have to look at the complete review cycle of the customer from the boarding to till whatever the transaction happens. Then workflow driven investigations. So there are a lot of things that moving when it comes to investigation. So investigation, it's not that we just throw alerts. So alerts is not going to help. So we have to be meaningful to make sure that the analyst, whatever they spend time, so we have to be very cautious in terms of they look at the right alerts, not that false positives. And regulatory ready reporting. So when it comes to regulatory ready reporting, so we have the standard templates from the regulatory, what are the reports that we have to send. So all that is like we have to be automate in terms of like using AI machine learning to automate these reports and make sure we will be get that ready available for the analyst to make a review and then submit it for the regulators. And so now we are here to present Amlock. So Amlock is now redesigned in terms of to support the connected banking with a connected risk. Like what are the risks we have seen? So we have seen a growth. We have seen what is accelerating about the threats, and we have seen how the structural traditional AML monitoring is not supportive. So based on that, we made a simple rule. So in terms of when it comes to connected banking, the connected defense is gonna make sure that we will be running through with proper systems would actually help us to get through with all these threats and risks. So again, here in Amlock, we have considered what are the threats and what are the issues are there, and based on that, our solution and the core focus we have just introduced. So starting with the data. So data is the first thing. Whatever you do, data is the first thing that you have to make sure that you have the proper data in place to handle it. So we are creating a unified single layer of data. This data is going to be like your core banking data, customer data, transaction data, all also like the enriched data. So what are the enrichment that you bring, like when it comes to like IP address or device profiling? So all this data, we're going to collect it as a single model. So that's one thing that the core capability that we wanted to bring it. And next thing about the speed, right? When it comes to speed, like be it an onboarding where we are doing a screening, as well as if it is a onboarding flow or a transaction event flow, we wanted to make sure that we have a real-time APIs to connect, and Amblock will flag immediately. So that is other thing that we wanted to look at it. And then when it comes to transaction flow, right? So transaction happens, right? When the payment is initiated. So we wanted to have a typology based rules, like regulatory rules are there. Those typology rules are the threshold that we have, on top of which we are having a hybrid decision, which means we are including a machine learning models. So machine learning models are help to identify the unknown patterns where the rules cannot able to figure it out. So there is always a blind spot in the system, right? So that is something we were wanted to cover it. And of course, the dynamic risk scoring. So dynamic risk scoring is like, it's not that one time we wanted to do the scoring. So we wanted to make sure that the monitoring should be perpetual. Like we have to score the user time to time whenever there is certain parameter changes or watch list changes, we have to score that immediately. And again, to connect the dots, where if you look at a single transaction may not, or single account may not have the full visibility. So we are having a network graph analysis. So network graph analysis will help to identify the undetected patterns which is going to populate. And unified case management. So single case management, which will have a 360-degree of view, where you can see the complete portfolio or the life cycle of the customer. So that information we wanted to, when analysts look at things, right? So analysts can see all the information together with an explainability AI, where we give a narration of why this case is triggered, and that will help analysts to produce or act upon quickly, rather than looking at things on his own. And regulatory reporting, the last bit. So regulatory reporting again. So it has two forms. One is your threshold-based reporting. Other one is where you figure out a suspicious transaction report, and it goes for approvals and levels to make sure that that reporting is being included. So we will have an automated solution where all the STRs and whatever other reports are FATCA reports, everything we wanted to get automated and ready for auto submission as well. And last bit about the MIS and dashboard. So we'll be having a real-time dashboards where you can see all the insights within that. And and also we are having a natural language queries where you can create a dynamic prompts, and that prompt will help you to build your own dashboards. And the reporting templates, like you can drag and drop fields and you can create what are the reports that you want. So that's about the core capabilities of Amblock. And so how you can measure it, right? So like, we are in the industry for more than 20 years. We have seen a lot of financial institutes have been using, and we have deployed Amblock in multiple institutes. So Amblock, it makes sure that we are compliant. None of our customers, like we are zero fine, like we are compliant with all the customers, and no one is actually have any issues or with the fines or something. And we wanted to ensure that whatever the traffic that we see, and we trigger the alerts in a sense, right? We don't need to. We pretty much focused on the false positives. So the false positive detection that we are targeting is 40% of false positive detection when it comes to Amlock, as well as the faster investigation process. As I said, like we are having an explainability AI, which will help to bring things shorter, and analysts will have precisely what needs to be worked, and we will try to eliminate all the false positive, the precisely what are the high risk alerts or cases that they wanted to review. Yeah. Yes. So, yes. So within Amlock, like our scalability is like we have 350 million transaction for single customer that we are working. So scalability and the trust is the other thing that we have in terms of measurable. Okay, so to have the African AML playbook, so we would, so one thing is like very clear that we have to close this gap in terms of when a transaction is initiated, financial crime is also be moving in the same speed. We have to make sure that we have to close that gap. And as well as the networks, we have to see the full chain of data in terms of how the transaction flow is going through. And of course, we have to focus on the alerts, like what are the alerts which gets triggered. So make sure that we wanted to have a right alerts for the right analyst reviews and regulatory proofs. Like we need to make sure that our not just submitting a report is not going to make sense. We have to be submitting before it happens, right? So before the money goes out, we have to be submitting the reports properly to the regulators. And the last is the AML framework that we're going to build. It's going to be compatible for any channels. Like if I'm expanding to any channels, it's going to be helpful to address those channels as well.
Okay.
Okay, so the last closing note. So as our financial ecosystem becomes more connected, our responsibility becomes greater. So every transaction is not just a value, it's a trust. So trust in our institution, trust in our system, trust in our future. The effective AML is how we protect the trust. Because in a connected financial world, the resilience is built with integrity, and integrity is non-negotiable. Thank you.
Don't go. Thank you very much. Let's give him another round of applause. And I would like to present you with a certificate of appreciation. So thank you very much for participating. Thank you for your wisdom. Thank you for reinforcing the points about trust. And we appreciate you. Thank you. All right. So at this point, let's give him another round of applause as he goes off. I would like to invite Mohammed up. We have a panel discussion before we go to the break. And so Mohammed will he will introduce all the different speakers, but at this point, you can come. We are having a panel discussion with our executive leaders called Financial Inclusion 3.0. Data-driven models and digital access. So Mohammed, you can come up, and then those who are supposed to be bringing the chairs,
Yes, thank you, Gillian.
can do that as well.
Thank you, Gillian.
You're welcome.
I've got the pen. No, I'm good. Thank you. No. The white ones. All right. Okay. So before I go about introducing the panel, all right. The panel topic, I think when Gillian was introducing the topic, she had a grim smile on her face. Gillian, would you mind if I ask you why? 3.0, financial inclusion 3.0, data-driven models and digital access. Joining me on the panel would be, please give a big round of applause for Mr. Emmanuel Morka, Regional Chief Information Officer, Access Bank Ghana PLC. With Emmanuel, of course, I have Mr. William Danso Abim, Country Head Consumer Products, EcoBank Ghana PLC. Please give a big round of applause for William Danso Abim. With William, I have Mustafa Samir Mohammed, Senior Solutions Architect, Sales Engineering Essential. Please give it a big round of applause for Mustafa Samir Mohammed. Alexander Forson, Head of E-Business, ADB, Agricultural Development Bank. Please give a big round of applause for Alexander Forson. And joining all of us is Mr. Ibo Quason, Acting Managing Director, Prudential Bank Ghana. Please give it a big round of applause for Mr. Ibo Quason. And of course, to make it funny, very, very interesting, filled with a lot of takebacks in terms of knowledge, your very own in-house moderator, that's myself. I will moderate the panel. Thank you, gentlemen. All right, so while the panelists take seat, of course, it's not right for me to say in the essence of time because we've left the train behind. Okay, so to begin with, I think I will start from the left, starting with William. Financial Inclusion 3.0, Data-Driven Models and Digital Access. Just a quick understanding of what do you think the topic stands for? What is your understanding of the topic? Why 3.0?
Okay.
Yes, okay. Can you collect?
Thank you, Mohammed, and it's a pleasure being here. 3.0, I thought the question was for you from her, and you managed to transfer it to us. But basically, I think financial inclusion is something that, especially with where we come from in Africa, we can never stop talking about it until we get to the point where we believe that everybody in Africa is included when it comes to finance. I believe that we've been approaching financial inclusion from the point of seeking to remove barriers that create the exclusion. Another approach that we've been adopting is seeking to create alternatives. But possibly we are getting to the point where we may need to go beyond just seeking to remove barriers. And with the increasing adoption of technology, find better alternatives to get everybody in. I think Ghana has done a great job. If you look at the statistics, great. But we still have a lot more people that today still can't find themselves in what we would call the mainstream. So basically, financial inclusion, we are looking at how do we create access for everybody and ensure that we can use alternate means to get them into the space. There's something that's on my heart personally that I don't know whether it's going to add to exclusion or it's going to help inclusion. And that's the evolving space of virtual assets.
Right.
And I would leave that with us all. Would it create further exclusion or it's going to aid our inclusion? And I think that's something that I would want us to just share some thoughts on. Thank you.
Well, thank you, William. I think the understanding that I take of that is it's not where you've gotten, it's how will you sustain that position and where will you go next. Yeah. All right. With that, Alex.
Thank you for the opportunity that you've given me. My understanding for 3.0, Financial Inclusion 3.0, is bringing banking to the doorsteps of everyone, the underserved and even the formal area. In the informal sector, our farmers in the field, our market women in the market areas, how are we bringing banking close to them? How simple are the products that we are giving to this market women? We need to bring them on board, not to make it or make banking as a difficult area or the banking area as a difficult area for them to approach, but we bring banking to their doorsteps. to enroll them all into the banking space.
Well, thank you, Alex. Mohammed, if you could.
Hello. Financial inclusion, of course, we all hear the shiny term of financial inclusion, but the main challenge we are dealing with is that financial institutions should shift from the standard access to impact for the people, because for many years financial inclusions for banks and financial institutions just meant opening new accounts or having more customers, but in the reality, is opening new accounts really will impact someone's life? That's the real question. That's why financial inclusion should shift the behavior of banks and financial institutions regarding how we create new products that are tailored for the customer based on the customer behavior, how the customer spend, how the customer save, how the customer transact in daily basis, and have this product to have a positive impact for the daily life of someone's life. Once we shift this thinking from access to impact, of course, banks will have the required products tailored for the customers, and at the same time, some scalable, sustainable, and truly impactful products for the customers.
Well, thank you, Mohammed. Emmanuel, if you could.
Thank you, Mohammed. For me, it's how we have evolved from our traditional landscape into a more fully digitalized space right now. Back in the days, for you to do banking, during the days of bricks and mortar, you have to go all the way. And because bank couldn't have presence, enough presence in the rural areas, you find out that banking were not taken to those space. But right now, a lot of digitalized exposures is now available. So we've evolved over time. So I think we are not in the space whereby it is the only thing that cannot sustain banking. The only way banking can now scale comfortably and grow comfortably is to make sure that our digital journey is fully fortified and secured.
Well, thank you, Emmanuel. Mr. Quayson.
Yes, thank you very much, and good morning to all. So for me, I would like to look at it from a tech side. So when you look at Android phones, for example, you know we have Android 10, 11, 12. We are now on Android 16. So if you say 3.0, for me, it's how can we do financial inclusion better than what we've done so far. So we are looking at a situation where financial inclusion goes to the very bottom of the ladder, and to make sure that the vulnerable women in particular are really benefiting from the real intent of getting financial inclusion at the bottom of the ladder.
Well, thank you, Mr. Quayson. All right, so I think that was a very good mixture of each individual giving their own bit about financial inclusion 3.0. What I particularly think with Emmanuel, I have a question. I mean, I'll jump right at it. From a CIO's perspective, right? What digital infrastructure or what digital infrastructure must banks prioritize to scale in this day and age, especially from a sustainable financial inclusion model across West Africa?
Thank you very much, Mohammed, for that question. So we are in a full area of digitalization, whereby we need to not take, like he said, make sure that everybody is brought into the bouquet or full bouquet of banking. One of the major areas is cross-border payment has to be enriched seriously. there is need for interoperability between banks and fintechs and the mobile operators, such that we can partner in such a way that it's easier to not take banking across borderlines. For instance, in Africa right now, and West Africa inclusive, what PAPS is currently doing, okay, making sure that they are interoperating with the switching companies for each of the country, that makes financial inclusion very easy. So I can move money easily to somebody in Gambia right now through PAPS. And what any other bank needs to do is to partner with PAPS to make sure they can fulfill that end state of ecosystem. Another major area that disturbs us that we want to make sure that happens is around lightweight applications. Okay, so in your strategy, you have to change, make sure that most of the things is mobile first, okay, so that you have USSDs that are lightweight, that can take banking straight to the people. They do not need to have a big phone or a smartphone to be able to do banking, you understand? And so within your strategy, that has to be enhanced and make sure that it's very, very strong, so that you can make sure that you put a lot of the banking solutions on the USSD wheel. And even though your mobile app will be such very, very light that you can move around easily and make sure that people are able to do banking easily across the region. Another major area will be, which the MP just spoke about, speak to elusively. That's in terms of identity, KYC, which we all know that Ghana has done very well. Today in Ghana, the Ghana card is your power. Nobody now needs to tell anybody that your card has expired. You are the one going to make sure immediately that you renew it, because once it's expired, you are like truncated from the system. But you need, all this has to see stabilized on a modernized infrastructure. Okay, so the infrastructure needs to be cloud native ready, capabilities with AI driven, API driven, that we can use to interoperate easily, because interoperability rules, mobile rules, and security is something that we cannot joke with. As far as I'm concerned, inclusion is not something that is driven by emotions. It's all the inclusiveness we are talking about has to be secured. So cybersecurity has to be fully enabled in everything that we do. The risk involvement has to be fully taken care of, because we run in an environment that is highly regulated. And so our stakeholders' money is fully has to be secured. If it is not secured, people will not come in. So no matter the app that we are building today, we have to make sure that at the end of the day, security and trust is built into the whole line for us to be able to succeed. But above it all, we'll make sure that we embrace technology as they come in quickly, so that we are not left behind. Every bank now knows today that if you do not run fast with what is happening, making sure they are secure, you'll be left behind, because that's the only way to scale effectively. Thank you.
Well, thank you, Emmanuel. I think so. When I asked what digital infrastructure must banks prioritize, I was more looking at from a digital aspect, but I think you've given a holistic view of what approach to take. And with that, I think let me move on to Alexander. Alex, how can digital identity frameworks, right, be integrated securely into banking systems to expand across without increasing systematic risk, or cost for that matter.
Thank you. Right. So I see digital identity as an enabler to financial inclusion. What do we as banks want? We want to open more bank accounts. We go through the rigorous process, having about 13-page or 15-page book for a customer to work in. But as I mentioned earlier, those in the informal sector or the underserved, in the market area or on the farms, how do you get them on board? You need to visit them in their space to open an account. But in the process of opening an account or enrolling more customers into your banking space, you need to consider the risk. In Ghana, what we have done, or even in our space, what we recently did was, because of the integration that we have with the NIA in respect of the ECOWAS card that we have in the system now, secured API, you have that in place. So you are able to go to the market with your verification device. You're able to capture their details and onboard them into your space. The other thing that you can also look at is when you onboard them, you categorize them into tiers. So maybe tier 1, tier 2, tier 3. So depending on the amount that or your risk appetite as a bank, you decide to put some categories in place so that the customers or the consumers will not do some transactions exceeding that limit. You also need to look at how you monitor their transactions, because a consumer might say that I'm doing 5,000 in a month, 5,000 Ghana cedi in a month. When you see transactions exceeding that particular amount, you need to flag it and do some investigation on it, okay? So that you, by doing so, you are curbing the risk transactions in that sector. Then you need to also look at collaboration with the regulator, collaboration with also the fintechs, those that are enabling you to enroll on these services. I remember an example. What we did was we went to the market area. We needed to onboard these market women in their space. First, their perception about banking is different. So you need to make sure that you get them to trust what you are bringing on board.
Right.
Trust is very important. So you get them on board, you register them, and immediately they get a notification that their account has been opened. That gives them the comfort that they are actually now into the banking space. Whatever amount at that point that you deposit into the account, they also receive a notification. But you let them understand the roles that they will play in before you regularize them into the mainstream area. So we categorize them as a virtual account and the mainstream account. Yeah.
Well, thank you. I think just to further, understand in the very question, what role do you think does product simplification play when, in accelerating financial inclusions at scale? What role does product simplification play in accelerating financial inclusion at scale?
Okay, so let me put it this way. We need to make sure that the products that we are bringing on board to the consumer is very simple to access. What does the consumer want? The consumer wants to be able to access the product, trust the product, and again, be able to use the product.
Correct.
So these are the things that you need to make sure that the product that you are bringing on board to them, they are able to, it simplifies, it's very much simple for them to also use. Yeah.
Wonderful, thank you. I think, William, I want to pose the same question to you. Help me understand.
Alex makes a very good point around what brings simplicity. And if you would want to simplify products, what it does is that I believe it takes away the barriers of entry. So anybody that needs to use the product, things that initially would have prevented them from having access to the product, you take them away. Secondly, when you make them simple, it becomes easy to trust because it's easy to onboard. Facts and features around it are clear, they are clean. And anything that is complex gives people thoughts that some things are hidden somewhere. Especially when you walk to a bank and or you are dealing with an insurance company and they give you a form and those fine print. People already you know how it works. So
Yeah.
I think when it's clear, when it's simple, people it helps to build trust. Again, when you also make it simple, even as a bank or a fintech, it kind of reduces your operational cost. Because if the product is simple, there's no need to invest heavily in back office support. Again, if it's simple, I won't say little, but then few integrations would also reduce errors and all that. So making the product simple, I think definitely would shape the conversation around usage. It would also increase usage as well. These are a few thoughts that I would share.
Okay, well, yes, Alex.
Let's look at also the fees that we apply. The fees that we also apply on the product that we have also introduced out there. Because the consumer will not be interested in hidden fees that you are bringing aboard. So if you let them understand, as much as you are making the product very simple, you need to also make the fees very clear to them so that they will also have that trust in your product.
Right, okay. Well, I think Mr. Quason has to add something.
On the tech side of things again, talking about simplicity. So if you look at, there's a case where in South Africa, for example, MTN wanted to move people from the increased usage in doing mobile banking, and then they tried to make mobile phones affordable. So they formed a partnership with Huawei and brought in simple phones that allow people to do banking. So it's good to have an S25 Ultra or an iPhone 16 Pro, which will do the job. But if you have an Infinix or an itel, that also does the job. Or you have a traditional, what we call the YAM phone here, that will do the job. Why do you need an iPhone 16 or a Samsung 25 Ultra? So that's where the simplicity comes in. Something functional, something basic, but that's the job.
Well, thank you so much. I think just as a follow-up to that question, Mr. Quason, this goes to you again. How can interoperable payment, right, payment systems unlock cross-border inclusion and regional economic participation as well?
So generally, KPMG does a CX survey every year, and for the 2024 one that was done, it's quite clear that the mobile is taking over from traditional banks. Mobile money, and then there's mobile banking, internet banking, ATMs are falling off. In that sense, Emmanuel spoke about it. So if you look at the PAPS, for example, now PAPS makes it easy for trans-border transactions to be done. It started in branch. Now for banks that have it on mobile, it's easy to do a transaction cross-border. And the fees are also quite cheaper compared to your traditional SWIFT. So that does it. But increasingly, you see that there's a real need for cross-border transactions, and that is why it is important that the scope expands. So as we speak now, we have about 18 countries on PAPS. Largely, the CFA zone is excluded, and there's a need for that expansion to be done so that we can increase the number of transactions being done cross-border.
Well, thank you so much. I think, William, I have the same question for you as well.
Okay, so just before I come to that, I think the comment around simplification, a thought just came to mind. If you take a look at the way MTN is designed the usage of the USSD for a customer who wants to do a withdrawal, I always think about it, and this is it. A customer walks to the agent who wants to do a withdrawal, and basically you do two things. You do a cash out, you allow it, and when a transaction goes through, you approve. Very simple. If you go to most of the banks, driving agency banking, you would realize that a lot of the work is left to the customer to do, and the agent only receives the money and pays it out. And that's an example of how I believe they've used simplification of a process to drive skill. So I just wanted to make that point. Now, coming to the issue of cross-border, I'll use the example of EcoBank. Of course, as a Pan-African bank with presence in 33 African markets, we've created a rail that allow us to move funds across these, nations. And what it does is this, that platform allow people in Ghana who are trading to access markets in other African countries. So I am in Ghana, I'm dealing with something that somebody needs in Mali, in Burkina. I will be able to trade with them just because I have a platform that allows me to receive payment or to, send some funds across. Again, when it comes to remittance, I think that Africa today, we are doing our best to remove all the barriers to allow us to easily move, across nations. We have people that are coming to Ghana today for schooling, for medical issues. It makes it easier for you to facilitate payments anytime you need to do that. So I believe interoperability across the region, across the nations, obviously is something to be pursued. It would help us drive more in terms of expanding the economy, giving access to newer markets to people, facilitating the movement of people across the nations, and something that definitely we need to push. And digital can't be taken out of the conversation.
Okay. Sorry, Mohammed.
Yes, Iman.
Okay, so let me ask something here. One of the major challenges that we're having is, so let's say Access Bank is present in 15 countries today in Africa. But the question is, for the places where you are not present, how are you able to take financial payments to those other places? Is only through collaboration. So you must have a very enriched API that you can either use to exchange, like I said, interpret with those other people who are there. They are the ones who not take you there. So it's very necessary. It's something that nobody can run away from because you cannot be everywhere at the end of the day.
Course.
EcoBank pride themselves of being in 33 countries, but we know that there are more than 33 countries in Africa. At the end of the day, there are still so many places where they are not there. But the only way they cannot take payments of their customers to those places is only through collaborations with the already existing capabilities that can go there. That's why PAPS is trying very hard as an enabler already from the governance perspective in Africa.
Of course.
Every other person is not enabled. GIPS can only work in Ghana. NIPS can only work in Nigeria. But at the end of the day, you now have an entity that has the right to
A central switch. Yeah.
Exactly. So that's the only way we can move.
I think that has been a challenge. Like, you talk about 8 switch, NIBs, GIPS. I think with all of the switches within the country, interoperability, of course, is right. Well, I think just to that, in continuum to the same question, I'm coming back to you, William. How can technology platforms enable banks? Like, Emmanuel just mentioned PAPS, right? So technology platforms enable banks to deploy scalable, inclusive, right, inclusion models without overhauling their core systems.
Okay, so I believe that, and I'm sure Emmanuel will be better placed to speak about technical integrations. Currently, the use of APIs helping a lot of integrations, whether it's a fintech connecting to a bank or fintech to fintech and all that. So obviously, that's one approach that is making it a bit easier. Institutions do not necessarily need to today even plug into the core banking application, something that most banks would not want to do. So if you speak to most of the banks, they are creating a middleware kind of that allow that level of integration and makes it a bit easier to roll out some of these initiatives. Again, if you look at solutions that are coming up, I think that we could also look at specific areas and use technology in those spaces. A lot of banks today are moving into agency banking. You do not necessarily need to have agency banking. Banks do not necessarily need to create a platform themselves. I believe that when there are fintechs that have better solutions, you can ride on that to be able to deploy such solutions. So in the development of mobile app solutions, in the development of USSD platforms, the development of agency banking solutions, you do not necessarily need to have those things in your core banking application. You can easily work with other players and get it done. An API would definitely create the opportunity for you to interact and exchange data. Another area I would want to look at is when it comes to onboarding. Onboarding is another critical area for banks today. And I believe it's again another place that we could ride on support from others. There are fintechs that, due to their agility, are able to turn things faster and better. Why would a bank not work with a platform that a fintech has designed to be able to, have access when it comes to seeking to onboard customers in specific areas? So I believe that in these areas, we should be able to use technology.
Well, thank you, William. I think, help me understand, because on the same question, building on the same thing, what role do you think analytics plays, in order to identifying financially invisible customers? Because we're talking about financial inclusion 3.0. Of course, I think about 2 years ago or 3 years ago in MWC Barcelona, the former vice president of Ghana, gave out the statistic that Ghana was the first ever country in African continent to achieve 100% financial inclusion, right? With that being the driver, what do you think gets in terms of to play what role does analytics play in identifying these financially invisible customers and bringing them into a formal banking ecosystem?
Okay, I think that analytics today is something that we cannot run away from, and I think it should be included in virtually every conversation we have. I'll give an example. EcoBank in 2016 partnered with a fintech and Mobile Money Limited today to drive digital loans. All right. And in our traditional sense of giving loans, we wouldn't have thought of giving loans to mobile money wallet holders. All right. But here we are with a market of a lot of customers that have enough footprints digitally to help you make a decision. So the conversation is, how do you analyze that and use that to inform credit decisions? Okay, so when it comes to analytics, I believe it is critical. It would help us to alternatively use certain information to help make decisions that traditionally we wouldn't have gone that way. So today banks are riding on that to be able to provide credit decision for customers. Again, when it comes to data analytics, I think it also helps to identify patterns. And patterns would obviously help you to better understand the life of customers. And if you have better understanding of their life, you can design better products, you can design better platforms, you can improve customer experience, you can take away pain points, and in so doing, you would create personalized solutions for customers. So I believe we can't take away data analytics. It's so critical, and any new solution that is coming up should have a certain form of functionality that is able to analyze the list of information that comes through. With the example I shared with our partnership with MTN Mobile Money Limited and the fintech, it's so interesting to note that even information around GSM, who you are making your call to, where you are making your call from. I mean, the last time I checked, even how often you charge your phone gives people an idea of, yes, an idea of how important, you know, the phone is, the kind of phone you are using. So there are a lot of data points that this device can bring us. So obviously, if we have a functionality that allows us to pick this data, analyze the data, draw out the patterns, eventually it helps in a lot, whether it is product design, it's delivery of product, personalization, channel development, solving customer issues. Today we have a big challenge with fraud in the space. Data analytics will definitely help us identify the patterns, identify the vulnerability, and be able to address it. So I believe it's quite critical.
Well, thank you. I think that was a little scary when you got there, talking about how all of the patterns are recorded, right? Now, with that being said, I think, given in the essence of time, of course, I have one question, and this goes out to all of you, starting with you, Mr. Quason. Help me understand, how can digital banking channels expand access for rural and agriculture communities that are traditionally underserved?
Okay, thank you. So I think a practical example in Ghana is with the Isoko platform. So we have Isoko, we have Agro Center. Some of them have even partnerships with Shell Foundation, MasterCard Foundation. But if you take the Isoko model, for example, it's helping farmers reach wholesalers, reach distributors. Even at the farm gate, is even helping them with weather patterns. When should they, is it a good time to sow, or is it a good time to harvest? Data or analytics on even some of the crop, the seeds they should be using, how to store their produce, things like that. Even to the extent that how much fertilizer inputs they buy, there's some analysis of it that will also provide data so that if they have to lend or look for some financial backing, there's some data on it that can be, that will form the basis for the lending decision to be made. So those are the things that will be done that helps the underserved. And again, like I said earlier, for on the technology side, you need phones for these things to go through. So you don't need any fancy phone. An itel phone or a Huawei phone or a Techno phone does the trick. And these are very cheap on the market. And that helps to ensure that the person at even the village or down the ladder has access to a simple smartphone that allows him to get all these functionalities done.
Well, I would like to move on to Emmanuel, but just to build on to what you said, because you mentioned ITEL or a regular smartphone. What scalable digital models do you think, from a leadership standpoint, right? How can banks embed financial inclusion into core strategy rather than treat it as a CSR initiative?
Okay. So first of all, I think that we need to see the whole financial inclusion agenda. We should see it as a way of empowering people. So you are empowering the youth, you are empowering women, you are empowering the underserved. If you look at it that way, that it gives you a different perspective. It's good to do CSR, but when you empower the people, they don't come back for handouts. So you're empowering them so that they can be on their own, they can stand on their own, and they don't look up for where's the next meal coming from. So for me, that's the perspective. And once you do that, you also look at a simple way of getting it done. And a simple way of getting it done is through mobile money or through USSD because of the technology that we have within Africa.
But then again, I mean, even that is more like a CSR-driven activity, right? So what I'm trying to understand is it possible at all? Because as a bank, when you are doing something of this nature, you're of course increasing the number of customers you have. right? Because new customers for you in the name of financial inclusion. So how is it that you can do something without giving it the optics of a CSR activity? Anybody, all the bankers. I think, Mohammed, you joined the crew as well.
Okay, okay. So let me help them. Not CSR, but there's a way you empower SMEs. That's one. Another way is to make light loans available.
Okay.
Loans that the risk appetite will be low. So depending on how big the bank is, they can decide to say, okay, everybody within this category of people can come in for a loan that will be repayable over time, so that the less, call it, I hate to use the word less privileged, because I believe everybody is privileged.
Underserved.
Yes, but exactly, the underserved. So within that rural community, you make things available that will now empower them to be able to now begin to do that business in a way that before you know it, they are growing and they become your trusted customers.
Right.
But they will always remember the person who gave them the initial startup, for them. So those are areas that banks are actually doing right now, empowering SMEs within the rural area so that they can. The only way the economy of a country can grow is when you have people like this grow up and begin to employ other people, because the government cannot do it all. Neither
Right.
can just the private sector do it. So enable them in such a way that they'll now be able to now take away some of these burdens away from the government, and people are happy at the end of the day. It's not everybody that wants to have a private jet. Some people just want to be able to eat 3 good square meals in a day, and they're okay. So we should be able to help them to achieve all that.
Well, thank you. I think I like how the word is changing. Empower has now become enable. I want to go to the next chair. Yes.
In fact, let me begin by the word impact. As I began my speech, that financial inclusions for many years was just about opening new accounts and having new customer, which is extremely important for the banks. But again, the main question is opening a new account have enough impact for someone's daily routine or someone's daily life. So financial inclusion should consider having tailored product based on the customer behavior. So as we spoke about AI, about machine learning, we should spoke about customer behavior, because each customer is different. So we must assess product based on the customer behavior, on how he spent, how much he gains, how much he saves, and his daily transactions and how he transact. Because the main question after tailoring this product is we need to have products that serve the customer in a way or in a positive impact, like, for example, helping a small organization to grow, or helping family managers their savings and their cash flow, or helping someone who have an emergency without falling into debt. All this required some serious tailoring of the products in order to have the ultimate goal of the financial inclusions. Once we done that, we will have scalable and sustainable customer journey and complete financial inclusion, which will lead at the most important part to have an really impact for the people's life, not just having more number as customer account, because I can open a new account and I can have a dormant account for 6 months. So what's the goal? But if I have a tailored customer experience, I will have the trust of the customer as we
course.
I will have the confidence of the customer, which will lead to a profit for the bank at the end, because once the trust is gained, the customer will begin to invest more money, to ask for more products, to have more services, and expand his saving and his journey with the bank, which is the main goal.
Well, thank you, Mohammed. I think, of course, I like the explanation. I think I don't want to be just another number in the bank system, right?
Exactly.
With that being said, I will let you pass because empower, enable, prudential, and then up until we reach EcoBank, I want to see what happens, right? So, Alex, if you could.
Okay, so let me put it this way. In the rural areas, I think in our region or in our sector, the issues that we have in that area is mostly network issues. If you are carrying a product there, what type of banking product are you taking to them? Because, of course, banks are not going to build physical structures there to get them on board. You have to send them or send to the area digital products. If they have smartphones, would they be able to use your service? If because of the network challenges that they have, most of these farmers in that area will be dealing with feature phones. USSD application will be the ideal product that you need to deploy at that area. How would you onboard them or enroll them in your space using the digital channels? So you need to send them products that will be easier to use for them to have easy access to their service. Okay, so that you will be able to reach out to them with the main things that they need. And again, the trust of the product, they having convenience in using your service and they having that strong trust in using your product. That's one thing that we need to look at.
Well, thank you. Now that is Agriculture Development Bank. So,
Okay. So I think the question of whether financial inclusion should be driven.
optics.
Yes, I get it. Whether it should be driven as a CSR
Yeah.
or it should be driven as a core strategy.
Yes.
Let me put this straight. You can't, you see, there's always a commercial line to financial inclusion.
Of course.
And as long as we continue to drive it as a CSR, we won't do that level of investment as banks. But if you see it that it has commercial ties and you make it a core strategy and you drive it, eventually you get your result. My position is that we should not drive financial inclusion as a CSR.
Of course. Yes.
We should drive it purely from a strategy perspective. Having had the privilege of leading the mass market business for EcoBank for some years, I can tell you that there's a lot of power in numbers.
Of course.
So when you enable people to come through, revenue per head may be small, but when you do it on a volume basis, you have no idea the impact. Today, let's take Mobile Money Limited in Ghana and the sort of volume that they make. Just look at them. It's crazy. If you want to look at revenue per head, per each customer, very small.
Of course.
But when you aggregate it, the eventual revenue they make way bigger than most of the banks in Ghana. So I think that it should not be driven from the point of CSR, which would limit investment and budget conversations.
Of course.
But it should be driven purely from strategy perspective, and it should be a long-term view. So you don't even restrict yourself to a year, 3 years, 5 years, 6 years, 10 years. What do you want to do to enable more people to come into the space? And when they come in, you definitely recoup your investment. And that's my take.
I think, William, bullseye. You got it for me, because the very meaning of CSR is lost the moment you're looking to drive revenue out of it, right? And apart from that, Ralph Mopita, the group CEO for MTN, was visiting Ghana, I think last week, right? 2-3 days ago. He was doing a tour of Ghana, and he did mention in one of his speeches that Ghana is the flagship country for MTN. And at the same time, you see, Vodafone has cut down what they were doing in Ghana. So this should tell you that a major telecom operator like MTN, their CEO is visiting your country and doing the rounds and trying to talk to the regulators, make framework a little favorable towards. Of course, Momo has plays a very important role, in achieving the financial inclusion that the country has. So they when Vodafone is reducing their investments, MTN is doubling their bet. That should say something about about what Ghana has as a from a financial inclusion potential. And I think with you giving the right words to it, of course not a CSR activity. It's I think one of the most strategic business development activity that could increase the numbers to, I don't know, 10x, right? Well, thank you so much. I think very interesting conversation. I personally come back to where we began at the beginning of this conversation. You told me that it's not where financial inclusion has gotten or Ghana has gotten with financial inclusion. It's how you continue to remain there and sustain that model to go forward. So I think, thank you so much, gentlemen. It was an interesting conversation. Looking forward to continuing this. And should you have any questions in the essence of time, you're welcome to reach out to the organizers. Send us an email and we will redirect those questions to the panelists of your choice and get the answers back to you, or possibly put you in touch with the panelists themselves. And we can continue the conversation in the break right now. Thank you so much for joining. Thank you. Jillian, if you could.
Your patience and for sticking with us without getting up at all. Thank you so much. And thank you to the panelists. So before we let you go, we just want to give you certificates of appreciation. But for everybody else, in the interest of time, we have our break now that is scheduled for 20 minutes. If we could grab everything we need and get back in here in 15 minutes, then we'll try and start speeding up things so that we can make up for some lost time. So while we are giving out the certificates, you can feel free to get up and start getting your refreshments. Thank you so much.
That's for you. Congratulations. Thank you.
The one for Alex.
Emmanuel.
The one for Alex is different.
Thank you. Mustafa. Yes. Thank you. Alec, for now. Thank you. William. Thank you. That was interesting. Thank you. Please, if you can for
So a group photo.
Yes. Yeah.
Yep.
I'm good. Thank you.
So this year you will see us doing that Braille account opening forms as well. So we have it as part of our. In any case, we have a sustainability department that is also breathing on our neck. And when you go to our website, you see that there's a constant banner on sustainability. So it's really part of our agenda now. It didn't used to be there, but now we are aware of it. Yeah. Thank you.
Thank you very much. For those of you who came into the room mid-conversation, there was a question from Michael, who is a disability inclusion consultant. And he wanted to know what are banks doing to be inclusive of those with disabilities. So, Ebo, thank you very much for your answer. And it's sometimes I think there are things that we take for granted where we think about the physical or the visible disabilities, not the invisible ones. So for example, people with visual impairments, if you send out an alert because there's some kind of fraud and they get an SMS, they can't read it. How are you connecting with them? So I think it's really, really important that we pay attention to that in Financial Inclusion 3.0. Now, I would like to invite our next speaker up. His name is
Yeah.
Testing, testing. Okay. I was just about to invite Alexi up. He is the CEO of BRICS, and you can see the pull-up banners around. He is going to be speaking on invisible processes, visible impact, rethinking how banks operate with adaptive technology. So let's give him a round of applause. Alexi, please come on up. Thank you.
Thank you. Okay. Hello. I can see my presentation yet. Perfect. Have you been in a lunch break? Me not, but it seems like I've been. I like this picture much. I like I'm completely full here. Very nice. Yes, my name is Alex, and I want to speak today about how banks could stay competitive in the modern, really changing world. And it's changing just wow. And I love to ask questions because without asking questions, you can't get actually answers. And my first answer, my first question is just, it seems it doesn't work, no? Oh, now yes. Sorry. Yes, and my first question is, actually how banks could stay competitive and actually go into economics theory. There are only 3 ways how to become a leader in any niche. You can have a monopoly, you can provide best prices, or you can build just a best product. And of course, we won't speak about monopoly on the conference about efficiency because it makes no sense. Probably best price is the worst kind of advantage that you can provide because any one step from your competitor just can ruin your possibilities, and it's really hard. And finally, what we have just best product. And what actually is fintech product? Money? No. Everybody have the same money, and actually it's not about that. It's not even about bank product. It's about a brand, because it's about how we interact with our clients, and the brand which is shaped by our processes, about how our clients can see us. And let's check the next. Let's check. Let's check. No. Yeah, finally. Let's check the next picture. It's a customer journey map. So it's kind of picture of relations between bank and a client. So how they interact. And there are some bars where we provided some services. Some of them were short, some of them, like mortgage, are quite long. And actually, within the whole this line, we interacted with the client with different channels. Speaking in person, sending messages, maybe with some messengers, maybe with emails, maybe with documents, maybe even with templates of documents, different kinds of interaction. And actually, the only thing that exists for a client is this interaction, because he or she has no ideas what is inside. But actually, inside, we have processes. We have complicated processes that build this kind of interaction, that build this kind of trust. And okay, yep, yes. And actually, business processes is what build trust. And this trust builds actually LTV, because every kind of interaction could be the last if it's bad interaction. And we think wise about these kind of things, because every interaction could be the last. But if client enjoys these interactions, he will provide us with more and more respect, and finally we can increase LTV. So I mean lifetime value and our income. So this is about like invisible processes which are completely hidden for a client, but they have a visible impact, because we finally end up with this kind of result. And actually, what I want to say, that brand management is not just kind of art. It is in some meaning. It is in some meaning. But what is more important, especially right now where technology is getting more and more important every day, it's turning to be some kind of craft, actually. And it means that we have to, and we can, but actually we have to work with that, because we have to achieve the right processes, the right results, to make communication more personalized, to work with data, to work with big data, to provide best services. Showing care could be automated, and these kind of interactions could be some really wise made kind of care between these institutions. And also we have to reduce like waiting times. Nobody like that thinks. So, and actually when we think about some efficient banking, we think about some rapid interactions with some predictable result. So yes, right. The world is changing dramatically, and things that I'm talking about are getting more and more important, because the level of expectations in a global world are just growing, because we can see all these extremely cool worldwide bank examples where everything is so smooth and nice, and actually clients worldwide expect to see the same in every case. And actually modern banking services is about maximum level of acceleration and some really rapid results and some smooth behavior from the side of technologies. Also, reasonable acceleration is only available when internal transactions are optimized and when they are like saving really little for a company. And finally, this is kind of phishing. Yes, please, please. No, no, it's no. Yes, in fact, you need to do both things. You have to speed up and reduce costs at the same time, and it's pretty challenging. Like to be great in both sides. So it's like to be better and to be more efficient, to be more effective, and it's hard, but this is the truth challenging in the modern world. So to achieve this, you really need to be agile and to have flexible IT, because you can have really great ideas, but if you're stuck in a slow technology, which is not scalable, which is not so optimized, all your ideas will just go to sand because it makes no sense. And I was talking about interactions. Actually, maybe before banks supposed that this is some kind of obligation because they had to provide some documents to follow some regulations, etc. But actually, this is a great opportunity to build new products. And with modern technologies, you can make numerous points of interaction to build a really amazing brand and to build and to show real care. It's important to view these kind of IT assets as an opportunity rather than obligation, and this is really important thing nowadays. And for that, you have to see all your background as some transparent and measurable thing where you can find points of inefficiency and reduce them to find bottlenecks and to find ways to how to produce better services. Actually, it's another challenge because nowadays we also have a bunch amount of technologies like Zoopark, like core banking systems, like ERPs, and etc. A lot of records, and all the data could be spread within many technologies, and it's really hard to change fast. And for that, we need to find the way how to speed up finally this process, because we need to build processes where all these data, these technologies, systems, our employees, robots, like artificial intelligent methods, and all these can work all together in one environment, which is fast and flexible. And let me show a couple of examples. Let me show a couple of, yes. Example one. Finally, we can show, yes, we can show pre-approved one-click personalized credit. In order to do that, we have to have full behavioral history with transactional patterns and to understand all the risks. Because if when client just open an application, I like this square design, and see that his loan was already approved, the only thing that he has to do is just to click, and that's it. And it's the great opportunity that showed the great efficiency in the real world. And actually, to do that, we have to integrate big amount of data and provide really great models of scoring. So it's about building really huge back office to have this kind of products, and it's a little bit challenging. Another example is about building superbank applications, which are quite challenging thing because we have to integrate a lot of products inside our banking environment to provide such unbanking products like selling gas or like plane tickets or different partner programs. So we have to integrate a lot of systems, experiment a lot, and provide new value for our customer, and maybe offer something new every week. And this is quite interesting, quite challenging. And I want to say that actually low-code technologies is the great idea to build something on the top of all this IT zoo. And it's not just about owning a customer or solving tasks. It's about like building reputation and earning together with the customer, like making him fall in love with you. And for example, if you thoughts about how we do that by ourselves, I'm working with the Bricks technologies. So it's like the way how we build a visual low-code platform to automate actually everything at all. And it's quite a comprehensive technology that allows to build business processes, different kind of business applications, work with data, work with documents, all in one environment. And that's why it helps to automate that pretty fast, because right inside the core, we have like low-code paradigm, and not it's the way to make a few steps from development department to analysts and citizen developers. That means that, first of all, we can become independent from the core systems, which will stay as they are, but also to involve analysts who can find bottlenecks, analyze data in the complete picture, not only in some separate bottlenecks. So, perfect. So this is a new amazing reality. And the same thing, also we collaborate with data, and modern world with AI is very important. I think data, so to work at they are. And we analyze every step of our solution because we can measure it. And if we can measure it, it means that we can improve it. And that's very important. And that allows us to build dozens of different fintech products for our clients in different fields like marketing, sales, front office, etc. But in a one platform. So some people can say like, what about vibe coding? Because today you can use artificial intelligence in order to build everything at all. This is a great idea for prototypes, and I love AI. But actually, it's difficult to support and develop, and it's completely impossible to use it for enterprise products and to collaborate with the right team. So maybe not today. So I think we need some core, some carcass to have all that. But AI is very important, but we have to use it wisely, especially in fintech, because AI should be really well orchestrated to work with your data, and it should be efficient, cost effective. We have to measure it, or not just providing nice tool, nice toy for that. That's why we also orchestrate that as a platform and allow to build and insert artificial intelligence right inside the process like that, and to understand the cost effectiveness of every step. For example, in some of our last projects, we had like only 3 cents per transaction for analyzing documents with like robot lawyer. And this is amazing because this is not just like playing with AI. It's like real cost-effective tool. So it's all about the core, like build, deploy, optimize on the every step. Actually, I will finish my presentation for today since it seems like I'm out of time. I had some example of how we automated the biggest bank of Azerbaijan with millions of transactions within a few weeks. They built it, their prototypes and run in production. And actually right now there are more than 200 automated business processes and the biggest bank of the country. And within the first few months, they optimized some processes in a few times because they measured everything and tried to improve it. So that's it. My final slide. I will be on a stand so we can speak about. It's important to be flexible in order to continue or become competitive in the modern world. Sorry for a little delay, and thank you for your attention.
Actually, don't go yet. One of the things that I want to make sure that we start building in is time for questions. So I would love if anybody has one question for Alexi before he goes, then feel free to wave your hand and I'll call you. Anybody? Vibe coding question, why vibe coding can't work at the enterprise level? Okay, let me ask that question then. So there's a lot of craze around vibe coding right now, but you made a statement that it doesn't work at the enterprise level. So in 1 minute, can you explain why that is?
Because in order to create vibe coding is working technology. I love it and it's really enjoyable thing, but the level of application that you can create with vibe coding ends on the level of your skills actually to describe the task that you are solving. And real enterprise solutions are so complicated that you actually need not just a prompt or description, you have to write a whole book that actually companies like us do or ABS developers do, because so big amount of security issues, different kind of back office things, and usually this is the result of collaboration of dozens of developers and analysts, and it's so extremely hard. And this is the first thing. And the second thing, that it should be really well tested before going to production, so it will take years and years usually, and in this case it just loses sense. Thank you.
Thank you very much. Don't go yet. So, would like to give him a certificate of appreciation as well. Please give him a round of applause. Thank you. So thank you so much. We have another panel discussion coming up. While we are waiting on them to bring up the chairs, I think it's a great opportunity to take a couple more questions. This one could be more broadly, okay, 2 more questions. The chairs are coming quickly. So, yes, sir. Do you have a loud voice? Can you project quickly? My time is going. Okay, so please stand. Give us your name. Give us your question. Can you hear him? Okay, can we get him a mic very quickly? One is coming to you.
Thank you. Ambassador Francis Fuskobia is my name. I am a multi-sector player. I do building construction, agriculture, and others.
Okay.
I was interested in the mobile money flood. So when the officer from EcoBank mentioned it and digital asset on all those digital transactions that we were having, I was doing a research, and data from Bank of Ghana shows that from 2021 up to 2024, Ghana has lost about 100 million Ghana cedi due to mobile money fraud. 2021 alone, it was 12.17 million Ghana cedi.
Okay.
And these monies are not coming from the pockets of those who are in this room. They are our mothers and our sisters by the roadside who are doing small business, who are not digitally literate to understand some of these transactions. So sometimes they press their phone, mistakenly send the money to someone.
So what's your question?
I wanted to ask them that this is not maybe MTN issue or Telecel issue. It's a national issue that we need to do digital literacy education. How are we going to do, and what should we do about it so that we protect the pocket of our sisters and brothers on the streets who are not financially or digitally literate? Thank you.
Okay, so your question is, how are we helping the ordinary person? Like, how are we protecting the ordinary person? Yes? That's your question?
Yes.
Okay. Is there anyone in the banking space that would like to take a shot and share how they are doing it in 1 minute? Oh, we're not protecting our people? Oh. Shall I call someone? Leo, would you like to answer? The mic is coming to you. So in the meantime, Mohammed, you can start walking over. So just in like 1 minute, let us know how.
I agree with him. I agree with him. That is the biggest challenge. What must be done is to embed education in the transaction journey. Because we've isolated education and awareness, but transactions are growing. That means people are using digital services. So we need to embed education in the journey.
Okay.
Thank you.
So education is key. Thank you so much. All right. So our chairs are in place. Our moderator is in place. So Mohammed, I'll turn it over to you for the next panel discussion. Thank you.
Thank you, Gillian. All right, so the next segment is the panel discussion. Power panel, artificial intelligence and analytics, redefining risk and customer value. Joining me on stage is Ernestina Mensah, Unit Head, Market Risk, Bank of Africa Limited. Please give it a big round of applause for Ernestina Mensah. And joining myself and Ernestina on stage is Lorinda Addy, Head of Customer Experience, Cal Bank PLC. Please give it a big round of applause to the two lovely ladies. That will be followed by Mr. Leopold Arma, of course, Chief Information Officer. Check. Chief Information Officer, Prudential Bank Ghana. And we have Mr. Alexei Trefilov, CEO for BRICS 365. And Mr. Yor Amoa Adam. Please give it a big round of applause for Yor Amoa Adam. Okay, I think I'm gonna take some time to adjust the mic. Well, okay, so I like the new seat. No, it's all right, please. Check. Well, thank you, Yor. Really appreciate that. All right, okay, so artificial intelligence and analytics, redefining risk and customer value. I'd like to begin with Yor. Please, I'd like you to give your two bits about the topic itself. The topic itself.
AI, right?
Yeah.
Right. So AI is simply artificial, what do you call it, intelligence, and it's a way where we can use data to predict different what do you call it, outcomes. A very good thing about AI has to do with the fact that between certain ages, let's just say from the 2000s to now, companies like Google, Microsoft, Amazon, even banks have gathered quite a number of data. The challenge is how do we process that data into insightable actions that can add value to banking. And so AI has come, I think, at the right time to help banks drive insightful data. How do we manage risk? How do we manage even lending, digital lending, and so on and so forth? So we are at a very crucial time in banking where AI will come to augment all the data we have collected over a period of time, how to process them faster, drive meaningful insight and actionable measures to add value to our bottom lines. Thank you.
Well, thank you. Alexei?
Right. Yeah. I think that it's very important to think about security in this meeting, of course, because we have to share that new possibilities between both sides. And if you become more transparent with your client, showing him that this is not like only your value, but it's a common value. And for example, if a recommendation system could be based, for example, on some obvious data, which is shown to a client that we use that and that in order to offer you such kind of products, for example. This is also building trust and open new possibilities to new products and new level of relations between client and bank.
Well, thank you, Alexei. Leopold?
My understanding of the topic has to do with how we are AI is gradually integrating risks to value. In the past, the two have been isolated. The risks people focus on how they can safeguard the environment. And then the front end also is focusing on how to deliver services to the customer. AI is enabling us to integrate both. In what sense? Much as AI is driving front-end experience to the customer, embedded in it are also controls to protect the customer from losing his or her funds or guiding the customer through the transaction journey safely. So AI is bringing stability into the environment. That's how I put it.
Thank you, Leopold. Yes, Ernestina.
Yeah, thank you. For me, AI has come to help us with our work, improve efficiency, the speed at which we do our work for risk management. Usually, we look at historical data, but with AI, we can monitor risk real time. That will help management even in decision making. So AI has come to stay. And now, if I see finance-related roles, JDs in international institutions, you see that aside your technical capability, they need you to have expertise in programming because they need you to make your work automated and to make it easy.
Well, thank you, Ernestina. Lorinda?
Thank you, Mohammed. So my understanding of the question, customer value comes to mind. So we have a lot of data sitting in organizations.
Of course.
What are we doing with the data and analytics? Now, how does it benefit the customer directly? What is in it for the customer? Are we just collecting data or is it using to improve their experience with us? All interactions on all our touch points. How is this data helping to improve that experience? Now, we are in a digital world and digitization comes with systems challenges. It comes with failed transactions. It comes with, so how are we using AI to support customers in these areas when their transactions fail, when systems fail? What is AI's role in helping customers? What is the value? Now, for customer value, I'll say that for the customer, value is not reacting fast. Value is anticipating earlier. So it's not about firefighting. It's not about something happened and we all rally around and try to resolve the issue. And that's what we all do sometimes. Proactive resolution, predictive service recovery is what the customer wants. And that's what AI can do for us. Now, AI should be able to predict service downtime, predict service failures, and prompt the customer ahead of time. That for the customer is value. The customer doesn't want to complaint before it is done. The customer wants you to anticipate their needs, and that's what customer value for me means.
Wonderful. I think so. It's established that none of us here believe that AI is here to take your jobs away, right? Okay. With that in mind, okay, because it reminds me of so I think most of you know I come from India, right? So about 2 weeks ago, there was a survey that was conducted around the remotest parts of Indian villages, and I happened to bump into this really interesting girl who's master's in business administration from a official qualification point of view, and her understanding of what she called hey hi technology. She said hey hi technology, yeah, is that it's come to take her job away. And that, I believe, is first of all lack of awareness, right? And with that as a driver, I think I'll straight out ask you, Lorinda, because of course awareness plays a very, very important role, not just artificial intelligence but anything for that matter. You started by saying there's a lot of data sitting in your banks, and that data has been collected over the course of a lot of years, right? And you've deployed chatbots, learned how this customer is reacting to a chatbot, and then you've used his call transcripts in the past that he's called. So one way or another, you've learned how this customer acts, and you want to use that to make that experience seamless for him, right? So help me understand, how is AI, according to you, transforming market risk management, right, from a reactive reporting function? All right. Uh, I want to understand, how is it helping from a reactive reporting function into real-time predictive resilience framework? How is it? Yep.
Okay, so traditional AI, traditional risk management actually was reactive, but with AI, it's now proactive.
Correct.
Now, like we said, we have a lot of data. How will we be able to meet particular customers at their point of need? When, for example, a customer has done a transaction and it's failed, how do we send a predictive alert ahead of time to let the customer know that, yes, your transaction failed, there's a reversal coming? Now, also in terms of fraud, how when there's fraud alerts, when you sign on to the app, for example, and there's a prompt asking you if you were the one. So that's, if it's not you, then it's really, it flags it as a fraud case.
Correct.
So
Yeah.
that's one of the things that makes customers, have confidence in the banks,
Yes.
because they know that we have their interest at heart and they
Correct.
can trust us.
Yes.
So that is proactive instead of reactive.
Yeah.
And so we are using that data to identify, or using real-time monitoring to find out what is happening on our platforms and who is where, what are the customers doing. And so by so doing, customers feel that we know them, we see them transacting, and we can tell where they're having issues and then preempt it and resolve them before they even happen. So that on its own is proactive.
Well, I think in during the networking break, I was talking to Mr. Omo, who's the CISO for Zenith Bank. I think this is the conversation we were having, how security plays one of the most important role in all of this. I think it being the key to making sure that all of the other drivers are in place. Like, for example, how you said just now that preempting, right? And reacting, like proactively asking this. That plays a very important role, as opposed to letting something happen, like an attack taking place, and then, to that thing, oh, we're sorry that this happened. Why don't you try this, right? So, yeah, I think
And we are
Ernestina,
very quick to say sorry.
absolutely. I mean, apologies come before everything
Exactly.
else. Ernestina, same question to you, please.
Yeah. So the market risk job, we are looking at the risk in the economy and how it impacts the bank's net interest income. So that is its profitability, liquidity risk, capital adequacy. And these things are very key to a bank's going concern. So with AI, in my job, I would have to set limits for treasury traders. I have to set counterparty limits for the counterparties they trade with. And with AI, I can now monitor these limits. I don't have to let them breach before I'll see that there's been a breach. I can use AI to send an alert, automated alert that at 80% breach, send email to maybe the person issuing the transaction, the head of department, and somebody in risk. At 90%, maybe escalate it further to ALCO. And in these ways, we are using AI to make our work more resilient. And also we can use AI for data generation. So we have the data, we can use AI to analyze it, to give us in-depth value. So if you are taking a market risk decision, we know that we can take the analysis from the AI and add value to our work. And also it helps with speed. And looking at how key this role is for management, assuming we have a software that is AI embedded and executive management is using it for their decision making, it makes it faster. They don't have to wait for me to tell them something. At the click of a button, they can know what's happening and then make a decision.
Well, thank you, Ernestina. I think makes a lot of sense. I think there was a time for me. All that I thought was ChatGPT was the only AI tool I needed ever, and I was very, very satisfied with it. But now, after all these conversation and learnings, I think Leopold, with increasing automation risk, increasing automation and risk modeling, where do you think human judgment remains indispensable? You know, where does it remain? Because especially in safeguarding financial stability.
Thank you. Human judgment is what has driven us up to this stage. We can't talk about AI in isolation. AI is really based on human judgment. So human judgment is indispensable. The best AI can do for us is to stretch us, for us to come out with our best. So much as AI would be able to help us to predict what is possible to happen, AI is not able to validate the assumptions. It's the human judgment that will validate the assumptions, which will end up developing the AI model. So human involvement would always be there. As a matter of fact, for us within the financial sector, we believe all that AI is going to end up help us doing or to achieve is for us to humanize digital experience, to have some human presence in the offerings. Yes, we've deployed ATMs, we deploy various channels, but backed with data, we'll be able to serve the customer as if we are present with the customer. That is what AI will help us to do. Thank you.
Well, thank you, Leopold. I think moving on to, Alexi, help me understand from a technology standpoint, right? What is moving from AI experimentation to enterprise-wide deployment, scalable implementation, realistically look like for banks today?
Actually, that's pretty interesting that our day started with a speech about how many people were actually involved in AI practice. And the real numbers are still pretty low. They're still pretty low worldwide. I mean, everybody is speaking about that, but real huge enterprise projects that end up with some great success are very limited. And the average number of unsuccessful projects with AI, based on AI, is way higher than average IT project implementation. That's just the purpose of risks. And this is the situation of the current day. But it means that pretty soon we'll have completely different situation. I mean that it's 100% sure. I'm 100% sure that we'll have a big amount of this kind of successful projects pretty soon in a few years. This is just a matter of time. And what is really important when I started to make research why project fails, it's because sometimes companies are trying to build extremely safe sandbox to them. And finally, it ends up as a project completely unrepresentative for a business targets. Like, okay, we tried that and this is really nice toy. Maybe we get some results, but we don't know how to run that in production, like the next step. And I believe that the most important is just to build the right expertise, how to use new technology in a real business, in a real tasks, and to build like data foundation to understand how to operate with your data and how to get the new vision of your assets, like how we can work with them in the new era. Second is about processes, like how all our assets that we have, how we work could be redesigned, rethinked with all that. Third, of course, security, because it's like the new threat. And actually, this is like the new electricity, and we just have to understand how to live in the new reality, how we can use AI to prevent AI risks. Actually, this is a little bit like a joke, but it works like that. Fourth is staff and employees, and how we can redesign our like human stuff, which are from flesh and blood.
Of course.
Yes, and how we can redesign these policies and how to save the company and transforming it into the new reality. So we have to move from sandbox projects to this more complex one, closer to reality, maybe in some small scale at the beginning, but everything should be linked with the practice.
Well, thank you, Alexei. I think with that, I ask Yo and the entire audience this question. Yo, how do you think banks can leverage AI to simultaneously strengthen risk resilience and create a measurable customer value without compromising trust and governance?
Right. Thank you so much for that question. So for banks, as I said earlier on, we've gathered so much data over a period of time. But in the country Ghana, we have Data Act that doesn't allow you to sort of infringe on someone's private data. So every bank here, UMB, Zenith, every bank here has subscribed to the Data Act that is keeping data integrity in view of a customer. Now, with that said, banks can use AI, because one of the questions you asked that finally this year answered was predictive analysis. How not to be shocked because something happened, you don't react, but you become more predictive, ensuring that whatever has happened, you foresee that with technology, and then you provide answers before the thing happens.
Right.
So banks can leverage on AI to develop different tools that can help them mitigate the risk on the market. One, we have so much data from customers. Customer character analysis is quite important, and that we can use AI to predict. Customers transact on Momo, which is currently one of the biggest data silos we have in the country. The MNOs, the MTNs, Telecel, and AT, they see the larger market of data in view of customer transactions, even far against traditional banks. And secondly, we also have customer transactions in view of history on TikTok, Instagram, Facebook, and the social media. So all these can help banks predict what might happen in view of risk. To mitigate risk on the market is so important in view of how banks can position themselves well to make value for their bottom line. Then also, it's quite also important that whilst we are doing this as banks, we don't then infringe on customers' privacy so much so that customer will feel unsafe. You know, now we have so many, for instance, you can just pick up your phone. Anyone can do that right now. Just have a conversation with anybody on a table by maybe mentioning the name Adidas, maybe size 41B or something like that. You go on Google or Instagram, you see the same shoe you were asking for is being shown to you. So targeting ads has become a thing because of AI. So how do we leverage on AI not to spook customers? Now, how did the bank get this information about me? So that's where we have to build the lines so that we don't overdo it in the sense that we begin to spook customers instead of helping customers. That's why that is so important in view of ensuring that we don't breach certain data privacies within the country.
Well, thank you. I think you rightfully covered it. I think I'll open the room for questions, if there is any. Artificial intelligence is supposed to be everybody's favorite subject today. Anybody? If somebody can pass the mic, please. Rimchim. Wow, I see 2 hands. 3. White.
Thank you. Oh, that's a gentleman behind me. Okay, so I have 2 questions, and the first one is to Leopold. Gen AI largely has been trained by engineers that live beyond our continent, and so there's a risk of bias. How do we, as Ghana or Africa, move further into AI, but ensuring inclusivity for our people? That's the first question. The second one is to Alexi. I heard you talk about your system, bricks, low code and all that. I differ with the vibe coding though, that I think it will come faster than, than you anticipate when it comes to enterprise implementation. But my question is, how will AI work or perform in companies like many of the old banks that have legacy systems and don't have a very strong data framework or foundation to power that AI that is required? Thank you.
Thank you. That is the challenge we face today, because most of the AI solutions we have in quote are foreign. And in touch on it, so our AI initiatives are more operating in silos. We are not able to integrate it into the entire workflow of our core banking services. We need to start building our models. We need to embed our uniqueness, our language, the way sometimes when you listen to the way AI even pronounces your name, it's totally different from the way we pronounce it in Ghana. So we need to start building our models. We need to move beyond Copilot in Microsoft 365. Because that's anytime you ask somebody, what is your AI experience? It's all about Microsoft 365. We need to look beyond that. We need to build structures to enable us achieve that. The first step is to even evolve our talents. How we recruit, the skill we need to look out for, and we need to empower our staff. We need to start training AI engineers in-house. We need to start training people with data governance background. That should be the first step. And somebody also touched on our legacy systems. It won't enable us to scale. So we need to take a second look at our legacy system. And finally, we have to make the most important shift in terms of mindset. We need to change the culture, the way we gather data, and the way we process data. So I believe these are the steps we need to follow to enable us integrate AI into our day-to-day operations for us to maximize the benefits. Thank you.
Well, thank you, Leopold. I think Alexei.
Yeah, thank you for your question. Actually, every new system will turn to be legacy one day if you don't modernize it. And during our practice, we faced so many times, especially in European countries where they have like 15 different products in order to serve like 1-2 important business tasks, like contracts regulations, for example. And it just drives me mad because all these systems have to be integrated with APIs and you have to move data between them. Some of them are too old, some of them don't have some methods, etc. And sometimes we replace this application zoo with one system. Sometimes we just leave it as is because in many cases it makes sense. In many cases, vibe coding could be used in order to refactor the complete solution, because if it's a pretty niche thing, it's possible to replace it, especially if it's kind of, sorry for technical terms, like CRUD application, which is just like database with a set of forms, like without complex logic underneath. And what I want to say, like, there are plenty options what to do with these systems, and actually there should be a person who just control the whole IT landscape, some application architect who understand which systems have lack of some functions, lack of technology, and how they could be improved with development of technologies. Actually, not so far. I've heard that probably most amount of all technologies that were created until now will turn to APIs for future technologies, because we still have this data in that systems, but they will stop satisfying us with that old interfaces. Actually, when I first time seen software like ChatGPT, I thought like, this is extremely revolutionary interface. Not about brains, but about the way how we communicate. In case of corporate software, we don't need to learn all these buttons and forms and tabs, etc. We don't need to send employees to studies for weeks in order to understand how SAP application work or complex ABS, because if person know, like in case of retail, it's pretty easy, like the person who is leading supermarket, like show me which products were like the best selling within 2 weeks, will get a report. And if this person is completely technically not educated, but can say it or type it, that's it. It's the new revolutionary interface how we can communicate with software. And finally, all our legacy software can turn into APIs for the new systems, which will look, I don't know yet. Actually, OpenAI released these widgets not so far. And this is like combination of this chat interface with some widgets to visualize data. And it seems like the best way how we can communicate with software so far. We don't know what will be in 1 year, but it's like communicate with very smart employee. So I think this is the future, but the most important thing is to have like the right person, like application architect, to understand what is the future of the whole set of systems in this environment. Thank you.
Well, thank you. Yes, yes.
Yes, I would like to add to what Lena said. In my experience, either a developer is localized or is cross-border. In each case, a project team constitution is very important. Assuming that the bank wants to integrate AI, a type, not even 365 or Copilot, but a certain type of AI like ChatGPT within their stream of work, putting together a project team is very important. As we were saying, the right skill set is very important. And fine beyond that, scoping. One challenge I found within my experience in the banking space is that most banks don't really take time to scope a project. So that's how you leave different windows and doors for the developer who is not onshore, offshore developer, to fill in those gaps for you. And then the last bit of that is UAT. So I have a proper scope documentation in view of how I want a program to look like. Then once the whole thing has been developed, I want to test and retest to ensure that every test cases and every scenario based on which I develop my scope has been satisfied. In this way, I can prevent bias. Whilst we train, as I said, train to augment our own local resources to ensure that we get local developers to develop silos for us. Thank you.
Well, thank you. Yeah, I think, okay, so in the interest of time, we'll take one last question and the next one. Yes. Yeah. Okay. So, yes, Julie. Huh? Yes, short answers, please. Otherwise, we'll redirect the questions to your emails as well, so you can, we'll continue the conversation. Perfect. So, Sophia, if you could please pass the, yes.
Thank you. And I think I'm the youngest here. I'm overwhelmed. So to the panel, I just have one question to ask. With increasing reliance on AI-driven systems, how do banks safeguard adversarial attacks and data manipulation? Should I take that again? With increasing reliance on AI-driven systems, how do banks safeguard against adversarial attacks and data manipulation? Thank you.
All right. Yeah. Let me attempt that question. So
okay.
Right. So data integrity is very key when it comes to any product. So it doesn't really matter whether it's AI or not. Also, I have to understand that even as robust as your security might be, there are people who have specialized in brisking and then also breaking into systems. And so employing the right people and a resource who understands security in view of safeguarding your data silos is quite important. Because if I have access to your data set, I can manipulate it. That's the main challenge. If I'm writing code, assuming I'm writing a bunch of code and I'm not following the code, clean code principles, for instance, then I leave a lot of bugs. I leave, for instance, I can have SQL injection in my code that can allow someone else sitting somewhere, maybe in India or China, but even here in Accra, maybe in the northern region of Accra, of Ghana, interjecting within my code and manipulating my data. So in as much as we are putting together resources to build the product, take security as one of the major concerns and safeguard your data against theft, against hacks, and so on and so forth. So invest mainly in cybersecurity, invest mainly in IT security to ensure that your environment is quite secure. Right.
Well, I think, does that help? All right, so I think, yes, the last question. It's the first table in the front.
Would you? Hello, my name is Elijah Zachary from Parks Data Center. So I've been here since morning. I think I haven't heard, maybe perhaps I came late, the discussion on, because I think Leopold, you mentioned it, about data sovereignty, the issue of data sovereignty. I haven't heard anybody mention on the panel that issue of data sovereignty, because if we have developer models, how do we ensure we will localize the data? So I work in the more or less private data center sector. So we feel that our data should be localized, right? Because then it helps where you don't have to route the data through a third-party country where it's on the cloud. So what happened like last year, October, with Azure, Microsoft Azure, and also AWS, other companies like NatWest and Capital One lost some of their data. So how do we encourage our financial institutions to localize the data? Because it even helps in terms of financial inclusion, to tie into the first discussion. where you can use USSD, because if the server is sitting at, say, Circle or Accra or anywhere, the person can just USSD if the app is 0 rated, where you don't need any more or less internet to access the platform, right? So that's first. And also, it also helps in terms of latency, where your customers, in terms of fraud detection, if the data, your servers are localized, it's easy for you to just access in terms of microsecond transaction. So I think it's very important that we emphasize and we zero in on co-locating our financial institution where the servers are localized for our own sake, as a country. Of course, we've attained political independence. We also have to attain data independence as well as a country. So that's what I want to say.
You're from Pax Data Center?
Yes, Pax Data Center. Yes.
All right, thank you. I'm Aaron
Yes.
from Callback. The question is, I think I'll direct it to Yao. That's customer behavior or character analytics, and then also to infringing on customers' privacy tied into CX. I do not see how best you would be able to have a predictive tool without, having a little bit of an intrusive system. Because to be able to, let's say, predict a customer's transaction or predict an activity going wrong, you need to first probably rely on one historical data and then be a little bit intrusive into the customer's data. So I want to know how best you would advise in terms of balancing the customer behavior analytics together with safeguarding the customer's privacy and also giving a very good experience to the customer. Yeah, thank you.
Right. Thank you so much for that.
Would you like to take that in person?
Sorry?
Would you like to take that question in person with him?
Yeah, it's fine.
Thank you. The reason is,
After.
let's because can you?
I can try.
All right, go on.
Right. So instead of saying that I have 4 or 5 customers, I have a system that can do character predictive analysis on all of them. If a customer hasn't started the journey of utilizing the tool that I have, there's no need to do that. So when the customer, for instance, a customer wants a loan, I have the right of access to check whether the customer is in right standing with the bank. The first thing is the customer in right standing with the bank. Number 2, is he or she creditworthy? So based on the customer's request type, I can initiate that, what we call it, predictive analysis on the customer to make judgment or make good informed decisions. So it's not like I'm just hand-picking customers and doing that. The consent of the customer is requesting for the loan. That's the consent. So you realize that even from internet banking point of view, if I want to request a loan from me as a person, as an entity, then you go through some T&Cs, which you will select. But the beauty of AI is that it's sleeping behind your check. Once you allow, then it triggers in the microseconds, the result is already there. A good example is, what do you call it? Credit scoring, for instance. It is in microseconds, then the results comes out. If the customer hasn't asked for the product, why do that on the customer? That is intrusive. So wait for the customer to initiate the process. Then based on that customer's consent, by clicking the button, going through the T&Cs, you can start the customer analysis. That also means that you have to build a very fast system to predict. And I come back to your question, right? Yes. Of course. For the sake of latency. Yes.
Well, thank you. I think before Jalen asked me to leave. All right, I think the only segment between us and lunch is the next segment by Fulake. I'd like to take this opportunity to thank the panelists for joining us. Of course, a very interesting conversation and artificial intelligence from a third party, from just an outlooker, a person standing on the outside and just getting a view, I would say, is a technology that is here to stay, helping you advance, in your daily lives and activities, including, of course, the BFSI institution. So thank you for your careful input, and we look forward to continuing the conversation. Yeah, please. That is for you. Ernestina. Leopold. Yeah. Please, if you can stand for a picture.
Testing. Hello. All right, let's give them a round of applause. Thank you very much. And for those of you who still have more questions about AI, write them down. You can consider giving them to me, and then I'll try and see if I can slip them in as we continue. Not a lot, like don't give me 20, just give me a few. But now we have one more speaker before we head to lunch. Folake, okay, you are here. Let us give her a round of applause. It is never easy to be the last presentation between food and everything else. So thank you so much for being here. Welcome.
Thank you. Good afternoon, ladies and gentlemen. Oops. Is it this way? Right. A big thank you to the organizers of this event. It has been insightful listening to the speakers before me. My name is Folake Egunjobi. I'm responsible for new business within the Anglophone West Africa region at UNS. I will be sharing frontline innovations in Africa's payment sector. Right. So I believe we can all agree that there are tremendous progress that needs to be made in the payment space because there are a lot of challenges. And I will start out with a quote by Augustine Cassons, which speaks to how in too many countries, too few people are able to access financial services. And when they're able to access these services, they're either too slow or too costly. Navigating B2B cross-border payments is challenging for digital and new banks. Now, the digital evolution is closing the gap between countries, but traditional payments is still not reflecting the pace at which this digital closure is occurring. If we look at an SME in Dubai trying to make a payment to a supplier in Ghana, we can see the number of loops that the transaction has to scale before it reaches the beneficiary. I see about 5 intermediary players. And of course, with so many players in between that transaction, of course, you can agree with me that it will be difficult to trace that transaction. It becomes slow. It will affect the turnaround time. And of course, it will take the cost up, affect go-to-market, and of course, lack transparency. Now, what can these banks do? Building and optimizing a global B2B payout network is complex. Simply integrating with a messaging solution isn't enough. And traditional cross-border wire transfers have frictions. Now, mobile wallets were estimated to be the fastest growing payment method last year with about 60% of the global population. When we think about the convergence with the mobile and payments, which is what the wallet provides, we recognize how important it is and how financial institutions still struggle when they want to make payments to the many wallets across Africa and also globally. Now, sending money back home is difficult for migrant workers. There's still a lot of limitations. I'm sure we know so many names, that currently offer cross-border payments to Ghana. But when you speak with Ghanaians in diaspora, they will still share some of the challenges that they experience, especially with navigating third-party platforms, attaching their payment instruments. We've been talking about trust all day, and then even the complex user experience. Sometimes they still have to visit brick and mortar stores to process these transactions. And I would say at Tunes, addressing a lot of all these challenges is what we're currently doing. Now, Tunes is a smart superhighway to move money around the world. We have a direct global network that allows us to pay out in 130 countries, 41 in Africa, hard to reach markets like China, India, US, Australia, many more. We're able to pay out to 320 payment methods and then in over 80 currencies. Now we have over 550 network members, and we're able to pay out to over 7 billion bank accounts and wallets across the globe, and 15 billion cards working with the major card schemes. Now, when we look at our delivery time, we settled 98% of our transactions in real time. Our platform uptime is at 99.9%. Transparency, we give real-time visibility, 100% on our transactions. And then when you look at our quality of service for last year, was at 98%. So we have a proven track record demonstrating measurable value for our customers. We do pay and accept. I mean, these are some of the products that we've rolled out in the market to address a lot of the challenges that are spoken about, and I'll go into them in detail further. So currently, under our pay offering, we are able to pay to wallets, over 120 digital wallet brands connected. The top names across Africa, Momo, HL, just to mention a few, Orange, and then pay to banks. We have over 60 local real-time payments connected. Pay to cards, I spoke about the top card schemes. And also another interesting use case for us is the pay by QR code in China. Under our accept service, we have 320 payment methods, mobile wallets, bank payments, and we also have digital vouchers, which we offer through our sister company, DT1, where we offer eSIMs and vouchers for Amazon, Netflix. We also have our buy now, pay later payments, which we offer through our other sister company, Ezra. With all of these broad capabilities, we're able to provide access to convenient financial services, which are cost-effective for our partners. So more on our pay, with a single API integration, we're able to offer you all of these use cases. And very interesting, the last one is the pay to stable coin wallets, which we've recently added. Now, speaking on our Swift Pay to wallets, this is a very interesting product for us, especially in Ghana. You don't have to carry out any integration. Your existing operations, treasury for processing pay will be sufficient for the Tunes pay to wallet and bank account offering. The only difference or the advantage that you get from this is that you gain access to Tunes global reach and Tunes delivery timeline. So you're able to pay out transactions instantly, and you're able to process this transaction using your traditional Swift messaging, but then you now have access to Tunes global network. Happy to speak with the banks after this presentation on how we can partner on this service. Still on wallets, I think we've all identified how critical it is and how important it is for banks to be able to speak to the many wallets across the world. So still using the Swift messaging due to the partnership between Swift and Tunes, you'll be able to access the wallets across Africa and also globally. We're talking Alipay, WeChat, Gcash in Asia, aside from the many wallets in Africa. So of course, we can speak to the benefits of the pay to wallet, especially for the banks, increased customer engagements, especially on your mobile wallet, accelerated go-to-market. This is a service that once we agree on the terms, we're able to roll out within 3 weeks. And then of course, it gives you a global reach. And again, at the real-time turnaround time that Tunes offers. Now to our Me2Me account top-up service. This is a product that I am very passionate about, especially in Ghana as well, where there's quite a lot of focus when it comes to cross-border on inbound. Now, how this service works is that it positions the banks in diaspora to be able to pool funds directly. When we look at the opportunity in the market, just looking at the UK, we have over 600 million USD coming into Ghana. And across Europe, we have over 800 million euros coming into Ghana. And then when we look largely, I think we have about 8 billion coming into Ghana annually from remittances, which shows that there's a lot of opportunity in the space. Now, how does the service work? A Ghanaian customer of, say, ABSA, Zenith Bank Ghana, UBA, just for example purpose, who has relocated to the UK or has an account, a bank account in the UK, will start and end the transaction in his ABSA mobile app. So he goes onto the app by virtue of the single integration that ABSA would have done with Tunes. The customer will see an icon that says top up, and then of course he'll be able to pull from his Barclays, Monzo account in the UK, and then of course the FX is determined by the local bank. The customer sees, accepts the rates, and then he does the necessary authentication, and then his local account is credited in CDs. Now, he does not leave the app for this service. He starts and he ends the process in your local app in Ghana. Beyond remittances, some banks that have launched this service have also been able to, working with their diaspora banking, they've been able to embed a lot of other services such as insurance policies in country, pension, mortgage, loans. They've been able to push all of these services to diaspora, and then customers are then encouraged to make their monthly repayments using the bank's app. So we believe this is a fantastic use case for the banks in Ghana. Now to stablecoin, which we are very excited about. And of course, the excitement is from the fact that we're able to settle in real time. And also there are no downtimes with settlement. It's 24/7. So weekends and public holidays do not impact the movement of the stablecoins. And of course, that then positions Tunes as a one-stop shop for fiat and stablecoin payout. Now we're able to accept USDT and USDC. And I mean, I've spoken about how this helps liquidity, especially I believe this use case will be very exciting for the guys in Treasury that are in this room, because of course it helps to mitigate a lot of the challenges you have with moving funds around. And of course, it helps us also move with time. Okay, the next, and I believe this is the last product, is the pay by QR codes. This is another exciting one for us, especially for those of you in the room that visited China. You know how difficult it is to use your card or your mobile to make payments. It's almost impossible to have it accepted. But what this product allows us to do, by single integration to Tunes, your customers can go to China and easily pay suppliers or in a coffee shop. I'll play a video, and this would demonstrate how the service works.
In China, domestic payments are seamless, but visitors struggle with foreign cards, cash, and mobile payments. Sarah and Joseph from Africa just arrived in China and are spending a few days in Beijing for a holiday.
一共是200元。
But Sarah forgot to bring her Chinese yuan, and Joseph left his wallet at the hotel. Ivan grew up in Singapore, and this is his first time visiting his grandma in Shanghai.
谢谢，一共60。
奶奶，我来还钱。But he had forgotten to prepare Chinese yuan for this trip, and the stall owner couldn't accept Singaporean dollars. Sujin is from Korea, and she is on a business trip to Beijing.
33。Hold on a sec.
Unfortunately, Sujin only has her Korean credit cards to pay for her coffee, which is not accepted by the cafe.
Can I cancel it?
Payments in China are not straightforward for foreigners. Meet Tunes' QR code payments, connecting mobile wallets and financial institutions around the world to China QR code payment systems. Tunes partnered with China's Digital Currency Institute and the Nets Union Clearing Corporation to build this solution. Tunes QR code payments connects members of the Tunes Direct Global Network to offer their customers instant, transparent, and dependable payments with a simple QR code scan from their app. For Sarah and Joseph, Tunes enables them to use their mobile wallet from Kenya to pay by simply scanning a QR code.
Thank you so much. Bye-bye. 不可以哦。
Thanks to Tunes, Ivan can pay with his Singapore mobile wallet app.
谢谢啊。
Tunes integration allows Sujin to pay via her Korean mobile wallet.
Thank you.
With Tunes, payments in China are now simpler, faster, and more convenient for visitors. Become a member of the Tunes Direct Global Network and enable your customers to pay effortlessly when in China. Tunes QR code payments, your fast lane to payments in China. Tunes, the smart superhighway to move money around the world.
Yes, Tunes provides capability for pay by QR codes in China, but it's not just China. Do you have Ghanaian customers who live in diaspora who need to send money home regularly? Or do you want to enable your banking platform for global payouts to bank accounts, to wallets via SWIFT? Tunes is a global infrastructure payments company that's able to provide unrivaled speed, visibility protection, and cost efficiency when making cross-border payments. Thank you.
Thank you very much, Falake. Can we give her another round of applause, please? This is for you to say thank you for taking your time to be here today. Now, okay, I think they want one more picture. Okay, next is lunch, food. So we are going to the restaurant. It's, I think, on the top floor. So you can either take the elevator that's like right around the corner, or you can take the stairs if you are feeling fit. We will take about 45 minutes for lunch, and then we will come back and wrap up the rest of the day. Thank you so much for your time. Put your questions together, give them to me when you see me, and then we'll try and get some of them answered. Thank you so much. everyone. The rest will join us as we go. Is Kenneth in the house? Amponsa? Not yet? Okay, one moment. All right. All right. Is Alex in the house? Alex Orleans Boham. Wave, let me see if you are here. Huh? Oh, Alex Orleans Boham. I'm not sure if I'm pronouncing it correctly. But is there anyone named Alex in the room? Let's start with that. No? Yes? Okay, tell us about yourself. So why not? There are a few of us here until the other Alex comes. Let me hear about you so that tell people what you do. Oh, 30 seconds to...
Okay, my name is Alexander Forsen. I've been with the banking space 24 years. Yes. I think September will be 25 years with one institution, Agricultural Development Bank. Okay, rose through the ranks from the tailoring stage now to the... I started from the grassroots as a teller, as a back office, rising through the ranks to technology, then now into the digital banking space. I'm heading the electronic banking department.
Wonderful. Thank you. So, even though you called him our grandfather, if he's our grandfather, then I'm a grandmother too. Ah, me too. I've been in there for like a couple decades, close to 30 years. Yeah. Okay, Alex, the other Alex. Yes, so we want. All right, so the other Alex is in the house. And so we will be taking our next speaker. Alex is the head of credit administration and control at CBG. And he is going to be speaking on the role of credit administration and control in shaping the future of banking in West Africa. So let's give Alex a lovely round of applause. I trust you've all eaten, so you should have strength to clap. But welcome, Alex. Thank you so much.
Thank you. They said I have 15 minutes, so I'm going to do it very fast. Good afternoon, regulators, industry leaders, ladies and gentlemen. As you know, I'm Alex. I'm the credit administrator of Consolidated Bank, and that puts a lot of work on my shoulder. It is an honor to speak at this summit and contribute to conversations shaping the future of banking in West Africa. Before I begin, I promise the presentation will be like a good loan, well-structured, low risk, and with a clear repayment plan. So I'm going to capture your attention in the few minutes coming. Okay, so when we discuss digital transformation and financial inclusion, the focus is largely on fintech, mobile platforms, and customer experience. These are critical, as we can see. However, I want to reiterate one fact that credit administration and control is the heart of the sustainable success of a bank. Why do I say that? In a time of rapid digital transformation and financial inclusion, the focus is often on fintech, mobile platforms, and customer experience. These are critical, but there's one that function that sits at the heart of it. I will speak on 5 core themes. 1, the strategic relevance of credit administration. Technology is failing us. Whenever I do presentations and I go, what I normally do is I print a copy of my presentation because technology can fail. So I'll tell you what. I'll start with the strategic relevance of credit administration. We have all the technology, we have everything. But if credit administration, which is more than an office function, which happens to be the nerve center of sustainable banking, is not around or is not evident, we can't succeed. Global authorities like Basel Community on Banking, the International Finance Corporation, and Global Credit Risk Management emphasize a few things. They emphasize clear, transparent, and documented credit processes, independent, objective credit risk assessment, structured portfolio management, to mention a few. In West Africa, where credit fuels SMEs, trade, agriculture, and households, weak credit governance is not an option. Every loan impacts jobs, livelihoods, and national development. Second on my list is the best practices across the credit life cycle. A disciplined credit system spans the entire life cycle, from origination to recovery. From origination of the loan, we have to take Hello? So this takes us to the documentation and perfection of documentation. My team are around, and they will tell you what. They call me process flower. I don't know why they call me. They said I'm always following processes because for me, if you don't have your document, trust me, your loan will not be disbursed. And I know why. Because I have to ensure that documentation is at the heart of the facility. Because tomorrow, if the facility falls off, then that is the fallback we have. Then comes remedial management and recovery, where there's timely ethical recovery frameworks in place so that our losses are mitigated. Because if you look at the NPL figures, I did some cursory analysis of NPL figures across. In Ghana, as of December, it was 18.9, Nigeria 3.9, all as of December, and Niger 27.24. That should tell you that our recovery figures are on the high side. So what does that mean? We have to enhance or, beef up our recovery processes, because you can do all what you want to do in fintech, all what you want to do in inclusive banking, etc. But seemingly, if you are not getting the money back, then at the end of the day, we are losing out as financial institutions or banks, etc. The third on my list is the crucial role of regulator or the Bank of Ghana in our case. The Bank of Ghana key laws like Banking and Specialized Deposit Taking Act, Act 2016, Bank of Ghana Act 202. They have key directives like reserve buffers, transparent pricing, digital lending, oversight, to mention a few. As technology and AI regulation, data protection, cybersecurity, AI fairness, and human oversight ensures digital adoption is safe and responsible. Why am I saying all this? If the regulator brings rules and we don't accord to it, we might lose out. For instance, they've given all the banks to reduce their NPLs by the year up to 10%. So all the banks are all hands on deck. We are trying to move our NPLs down. So regulator also comes in when we need to shape Africa in terms of finance. The last on my technology. The fourth of my shit is internal control culture. Policies alone cannot, and I repeat, policies alone cannot ensure governance. Culture does. A bank proverb reminds us, a bank without proper controls is like a goat without a rope. It will stray into danger because we need to go with a particular guideline. So if the internal processes are not adhered to, at the end of the day, we end up getting astray or failing in what we do. The last on my list, I'm trying to rush through because of my time, is the transformative power of technology and data. Technology is indeed reshaping credit administration. We now have AI credit-driven models, open banking and data aggregation. We even have eKYC and digital identity verification in our banks, automated collateral tracking, behavioral insights. I tell you what, West Africa can leapfrog legacy banking models, but innovation must align with regulations and global ethics. In conclusion, what I would say is the future of banking in West Africa will not be defined by size, capital, or market share, but by global best practices in credit governance, alignment with regulatory frameworks, especially Bank of Ghana or the regulatory in a West African country, strong and internal control culture, responsible use of digital technology. Credit administration and control provides a foundation. Ensuring growth is responsible, innovation is sustainable, and trust is preserved. Remember, technology accelerates progress, but governance sustains it. Profitability is not about giving more loans. It is about giving the right loans. Thank you.
Thank you so much, Alex. Before you go, wait, please come. I'm not done with you yet. So, before I let him sit down, again, I would like to ask, is there anyone that has any questions for Alex? He touched on a few things, yes, so I want to give you time to at least answer one or two questions. So please go ahead.
Check. Hello. Check.
Hello, Alex. Hello, everyone. With everybody talking about AI and technology with credit administration, knowing that Ghana, we've not really built a good credit technology system, how do we ensure that our systems don't have any biases or discrimination as we go ahead in introducing AI into our credit administration system?
That's a tough one. Indeed, our systems are not robust, as you're saying. However, but I believe in one thing. a journey starts with a step. If we know where we are going, then we know how we will get there. We've started the AI analytics, using it as, for platforms in the bank to assess customers. Even now we use it for customer behavioral, like behaviors of customers and all that. I guess at a point, all of them will come together. So what I say is, I think we should give it time. Time is of essence, because if you want to get it right, you do the right thing. We started, it's a good footing. That's why I say, fintechs, all of that, we are all doing well, but it's a matter of time. So I think time will solve most of these issues because we started on a good footing. Thank you.
Let me add to that. Sorry to interject. I'm an AI enthusiast, so I play in that domain a little. What I want to add is this, governance is very, very important, laying out the structure. The technology will actually do the execution, but governance is very important. And how do you address this? There's this AI management system, 42001. It's like we are banks. We have done 27001. It's a management system that actually addresses a lot of cybersecurity and information security concern. So also is 42001, ISO 42001. I believe in no distant time, the regulator will want us to get involved in this adoption of this certification. So that will spell out the governance for your organization. It will go deep into understanding how to curtail biases, how to curtail poisoning, data poisoning, how to be trustworthy when taking decisions, when deploying an AI solution, how it will actually benefit the organization. So that is the very first step I would have loved anyone that is trying to get into the AI space to get that done, so that it will guide your implementation in all areas of adoption. Thank you so much.
Thank you. Thank you. Any more questions? Any more questions? I think that's it. All right, then. Thank you. So you can get my seat.
Thank you so much, Alex. You may take, photographers. Before he sits, let me do a quick certificate presentation. Here is the cameraman right here. Give him a round of applause. Oh, they need us to stand. Okay. Got it? Awesome. Thank you so much. Okay, so now we have a panel discussion coming up, our last panel discussion for the day. This one will be moderated by Sylvia Sedo. So you can come up, please. And joining her will be 3 panel members. So there is Seth Frimpong Manso. Seth, are you here? Yep, okay. Please come on up. So you're in the first seat. Then I would like to invite Umo. Are you here? Yes. Awesome. And then finally, Senanu Dacha. And the topic for this panel is cybersecurity in 2026, trust, tech, and transformation.
Good evening, everyone. So the discussion for my strategic panel is that we are going to be looking at emerging financial cyber threats, attack vectors, security architectures, data privacy and data protection frameworks, and how we can strengthen institutional resilience and building customer trust in the digital first ecosystem that we currently have. Most of you will agree with me that between 2020 and now, there has been a shift in how we use technology, which was fast-tracked by the COVID pandemic because business had to go on. So I'll start with Seth. So as a regional CISO, how are emerging cross-border cyber threats evolving across West Africa, and what do you think is the strategic shift that banks need to adopt in 2026 and beyond?
Thank you for the question. We know cyber is evolving, and a lot of strategies that companies are putting in place. These cyber criminals are also going ahead of the strategies that we put in place. So day in, day out, there are new strategies, there are new modus operandi on how they're able to get to their target. Across the region, one thing that is still coming up is ransomware. We cannot write that one away when it comes to cyber crime and cyber issues. Ransomware is shifting from where they will encrypt your data and then we will requesting for a ransom. So the traditional way is once your system are encrypted, they will be requesting for a ransom for you to pay before they will give you the encryption key to unlock such things. But businesses are also coming up with a solution, getting more resilient with such strategy by these attackers. So the backups are still adequate to restore from any ransomware attack. And then the paying of ransom, we are all advised not to pay. So even if your system are encrypted, they will be at a loss, not getting anything from you. So what we are doing now is to threaten you to leak the data that they've been exfiltrated from your system out there. Well, if it becomes out there, it becomes a data breach. And the regulators will also be chasing you for that. There are a lot of sanctions when customer data is found out there, and they will be threatening you on that. So it becomes another dime where ransomware will be a data exfiltration as well. And once that happens, what is the requirement? What should we put in place to prevent that? Data breaches are all over everywhere. But in Africa, because proper sanctions are not melted out to these, those who are found culprit to these data breaches, we sometimes do not put adequate measures in place to prevent that. What can be done to prevent that? Because it's data breach, it's better to encrypt all your data, and data moves around. It's a data at rest, data in transit, or data in motion. It's better to get a good encryption methodology to encrypt your data even at rest, so that if it gets into the hands of a wrong person, they will never be able to decrypt the data and then make it outside there for everybody to get hold of. Social engineering and phishing is also on the rise across the region. Social engineering methods, now with the advent of AI, it's now framed in such a way that it's real, and then you will not even find a loophole in how they crafted the message, because they can understand the target, they can understand the environment that they want to target, they can understand whatever thing that they want to use, and there are tools all around. Some are even offering them as a service that you don't need any expertise even before you become a cyber criminal. It's easy because of AI that this has become rampant in the region. And it is now good for any institution. Something that is being done with AI the only solution to counter is also AI. So AI tools that can learn the behavioral, the intrusion, your network that can learn over time. And once it's able to learn over time, any small precision message that is sent, this system can be detected. There's a SIM-box fraud. You know, a lot of people have been captured here in Ghana. That's a lot of issues that you've been picking up. And SIM-box fraud, you know how to also overcome that. That's a change of account numbers that are linked to our banking system. Any change should go through a second factor authentication or dual process, the dual authentication process, so that a supervisor will approve if there's going to be any change as the phone number is tied to the device that the person is using, so that we can minimize this. We cannot eradicate them entirely, but minimize this exposure that is being meted out. One thing that is also coming out, let me say this one, the cryptography, the digital asset that is being enrolled, people have started targeting that as well. There's a cryptographic scam that we should also be aware of. I think at the appropriate time, when it gets to my time, I'll put more emphasis on that. Thank you.
Okay, Seth. So,
a little also, we're looking at the region. I don't know how much time we have. We're looking at the region now, so I will want to add collaboration. You see, cybersecurity is borderless as we speak now. So a malware or probably a phishing attack can happen in Accra. Then
let me ask the question.
you ask a question. Okay.
Okay, so Seth, we hear you spoke about ransomware, the need for encryption, backups, and update of customer data. So my question to you, is that looking at Ghana, in terms of strengthening institutional resilience in 2026 and beyond, what critical cyber risk stress testing do you believe should be done in order to check all what Seth has said in terms of backup, stress tests, updating of data, encryption, as well as the regulatory landscape, using AI to combat certain attack vectors and threats?
Okay, so in concluding what I started at the regional level, collaboration is very, very important. I will come to your question so that I don't throw the audience off balance. I don't want to throw us off balance. So we're talking about a cybersecurity that is borderless, and we're talking about probably a phishing attack in Accra and harvesting of data in maybe Lome. And having gotten credentials, of course, multiple transactions across borders happening maybe in Nigeria. So what am I saying? Of course, the indicator of compromise don't have to wait hours, but it can be communicated in minutes across region to actually put us in a platform of resilience. Now, coming to how we can make this, of course, definitely stress test is important, like you said. In this part of the country, what we do probably DR tests, we do business continuity tests, and that's all. Please, there is a need to do ransomware readiness tests, and there's a need to actually conduct a ransomware test, a simulation, of course, definitely not a destructive ransomware test, that will put you on your toes, that will make everybody in your incident response team very, very ready for any incident that may crop up, in the course of the organization. So this is one aspect that has to be taken very seriously. Data recovery, disaster recovery, BCP, also incident tests like ransomware, because that is very, very, like you said, is something that is happening even in our domain here in Ghana.
Okay, thank you, Seth. Sorry, Senanu. Apologies. So, based on what the other panelists said, what are the most critical cyber critical as attack vectors targeting financial institutions today, and how do we prepare our board members to take it as a strategic priority, especially considering that more than often cyber is seen as a technical function?
Thank you. Hello? Can you hear me? Okay, thank you. Cybersecurity, most of the times, I think our way of communication, we usually look at it from the technical perspective, which makes it a little difficult for those at the board and the management level to understand what we are talking about. For us to be able to make it more proactive and make the board be able to understand, to be able to support whatever needs to be done, we have to start thinking in the line of what their expectations are. Because when you look at the board, they are concerned about their liquidity, they are concerned about their credit risk, they are concerned about all the risks that will impact on their shareholder funds, their share value, and all those ones. So as security or as CISOs that are heading institutions, one area we can actually focus on is to communicate these risks, these cyber risks in terms of monetary values, because that is what can make them understand the impact of how this is going to happen. My colleagues spoke about ransomware. So if ransomware is to attack your organization now, how much will it cost that particular organization in terms of, let's say, the reputational risk, in terms of the service downtime, in terms of if you are able to quantify this in monetary terms and be able to communicate it to your board or your management, I'm sure they'll be able to understand that 2.5% of our shareholder funds will be lost if a ransomware is to attack today. And once they understand it from that perspective, you will be able to push, it will make cybersecurity a board activity. Thank you.
Thank you very much. So quantification of the risk is very, very important. Seth, you work regionally. In terms of regulatory framework, looking at cyber, especially looking at the West African region, are they aligned or they are different? And how would you pair it against the directives we have here in Ghana, looking at this Cybersecurity Authority as well as the BOG directives with regards to critical information infrastructure, as well as global standards?
All right, thank you. For Ghana, we are fortunate that we are ahead when it comes to cybersecurity, governance, regulations, laws, directives. It was an area where we have regulation, we have Cybersecurity Act that governs cybersecurity activity, protection of critical information infrastructure. There's a Data Protection Act that also governs the privacy of data. And then BOG, Bank of Ghana, also has a directive specifically for a financial institution regulated by Bank of Ghana. And in addition to that, we have international standards. The international standard, the regulation that we have in place, when you comply to them, you are complying to about more than 95% of this international standard. So you see that the international standard, international regulation when it comes to data protection, the GDPR for cybersecurity, ISMS, Information Security Management System, ISO 27001, which deal with information security. The business continuity, ISO 22301, business continuity management systems in place, PCI DSS, all of these standards have a link or is aligned with our local regulation. The reason why I'm saying Ghana is far ahead, when you check with other neighboring countries that we find ourselves, Nigeria got their data protection, I think last year, Data Protection Act, somewhere last year, also last 2 years. And they also have their regulation as well. But Ghana was far ahead before Nigeria. Other West African countries are now coming up with cybersecurity laws. And you could see that even our cybersecurity authority, when it was rated globally, were among, where were you? First, last, yes. So this regulation is aligned with international regulation. But because our neighboring countries are not well aligned, we sometimes, if you want to supervise or want to govern how their cybersecurity framework should be, one, they have to align with the international standard, and then you set your country as the benchmark for these institutions so that they will be abreast, their security posture will be on top. In aligning with our regulation, the best option, if you want to fortify your environment, take a cybersecurity directive from Bank of Ghana. Try to align, do a gap analysis, try to align with each of these requirements when it comes to governance, architecture, hardening your system, the databases, your human resources. You see, the moment you go through and do a competency framework with these guidelines, but believe you me, you will be complying, and then you will fortify your environment. And then you'll be complying with international standards as well. So Ghana, we are fortunate. If you do not have any standard even to work with, take the Cybersecurity Act, take a Bank of Ghana directive, and go by what the directive say, and you'll be okay with your cybersecurity posture.
Sorry. Okay. Usually with standards, it's easy to have it written down and say we follow standards. The issue comes with implementing. So, my question to you is, looking at the current regulatory landscape, do you believe that the frameworks are sufficient enough to handle AI-driven and cloud-based threats? And then also, in terms of the governance aspect of that, are there gaps? What gaps have you identified when it comes to implementing these frameworks and regulations?
Said has spoken about a lot of standards mandated by BOG. He has mentioned the directive. He has mentioned the CII directive for critical infrastructure. And he has also mentioned those certifications that are mandated by BOG as a bank, as a banking regulator. So I will say this directive have been of immense contribution to the cybersecurity space in Ghana. I want to put a practical front to that. You see, when you go box ticking, that is where the problem comes. I've had an instance, somebody called me, this person, organization has been certified, 27001, and I received a call, what is a statement of applicability? So it therefore means that such implementation was actually a box-ticking one, and of course it was gonna bring a lot of problems. So you can now blame the regulator that probably the directive they have given to us is not working. And you see people come and say, oh, we were certified just yesterday, how come we were breached? It boils down to this box-ticking also. It is very, very important that the standard that he mentioned, the directive that he mentioned, to even add another to it. Take, for example, the Cybersecurity Act. Now, the Cybersecurity Act has come up with two functional bodies, independent assessor and industry forum, which means cybersecurity governance in Ghana is working. I am one of the independent assessors. I am part of the industry forum, so I know what we are doing. So it therefore means that this directive, they are actually guiding and giving us direction as what is expected of the cybersecurity ecosystem in Ghana. They are talking about implementation. That is where the problem lies. If you go box ticking, definitely you're going to have issues. Then when it comes to implementation proper, we have to actually bring in leadership. You will have the technology there to execute, especially on the cybersecurity front. You will have the governance to give structure, but you will need leadership to actually drive the process. That is why in standard like 27001, it started with leadership. You must have your leadership support before you can successfully implement, because they are going to provide the resources, they are going to provide the maybe things that are needed for implementation, devices, equipment, and all those stuff, and support to the general organization. So if they are not in the forefront of activities, definitely implementation of a directive, implementation of standard will not work. So it is not that the regulators are not doing their part, that the directives and standard that they have asked us to kind of embrace is not working. It is a human factor. And this human factor, honestly speaking, is traced to leadership. That is why those standards, a great number of them, 22301, 27001, 27701, all addresses the fact that, or state the fact that you must have leadership, management, board buy-in.
Okay, so the tone has to be set at the top, board buy-in. Senanu, my question for you is that we've had a lot of board readiness, board has to lead the talk, etc. But most of our board members are not necessarily cyber savvy. What cybersecurity matrices or KPIs would you recommend the board to have a critical look at so as to be able to ensure that implementing these standards and regulation does not become a checkbox activity which we do today and forget tomorrow? What key matrices do you believe board members or those in top leadership positions should hold their team and the company by to implement this?
Thank you. Thank you. I think for the board to be able to understand what happens in the cyberspace and how it actually impacts on the entire organization, there are some questions they need to ask the technical team that are presenting reports to them. Instead of focusing on compliance, they must begin to focus on how this compliance, what is the value of this compliance activity, its impact on the organization. So at every point in time, they must find out, okay, if you say there will be a downtime, or if you say there will be a breach, this breach you are talking about, how, if it happens, how long will it take us? How much will be involved? You should be able to speak to this. They should be able to ask these questions so that they get much deeper understanding of what it entails to be able to go through that particular process or that particular risk. If maybe at the reporting stage, you are being told that we have 1,200 critical vulnerabilities identified during our scans, how does this impact on your value? How does it impact on the activities, the shareholding fund of the organization? All these things, the board must be able to actually ask questions, and these questions must be tailored towards what kind of loss is expected from these particular activities in case it actually happens. I think when they begin to ask those questions, I'm sure they will get the right answers.
Thank you. Asking questions. So at this juncture, we would like the audience to ask our panelists some questions. Okay. Can we get? Okay, I have my man in the, how do we call it? Fugu, yes, our national pride. Please ask your question. Followed by the man at the table, at your table, then come to you. So please go ahead with the question. We have a mic for them.
collect my mic.
Francis Ofosukobia, my question goes to the officer on my extreme left. Some of us have been here since morning when the summit started. We've heard a lot of things about AI, technology, and everything. And some few minutes ago, you said Ghana is ahead when it comes to this AI, technology, policy document. It's true. When it comes to Africa, almost everything, Ghana has a policy document on it, but it doesn't reflect and translate to the grassroots, the people who are actually the builders of the economy. We have all this, but like I said earlier, within 5 years, Ghana lost about 100 million Ghana cedi due to mobile money fraud. Last month, December, my landlord's daughter lost about 50,000 just ordering a pizza of less than $100. The guys were able to enter her account. They took away 1,000 Ghana cedi from her Momo account, then enter her bank account. By the time the officer in the bank realized over 45,000 was left from her account. Up to now, we have not been able to trace and get even $1 or 1 cedi of that amount. So with all this beautiful conversation, the question I'm asking is, next year we're coming to do 26 Connected Banking Summit. We come and speak nicely. Then the problem, those are the grassroots are always facing the problem. What can we do about it? Thank you.
Let me, okay, let him finish. Okay, be sure that I don't forget because the man has said so many words. Okay, let's start this way. Of course, the mobile money space wasn't regulated until recently, until very recently. And there's a lot of action in that space as we speak. Now, but you must not forget that there's a human factor there. There's a great human factor there. Now, where I will pick from being very emotional to your concern is that definitely we have to employ AI to assist us. Now, what am I saying? Probably detect patterns in transaction, whole transaction that are not seamlessly believed to be happening because of the pattern, not so? So that is where I will say banks will actually come in to employ the use of a fraud solution, not so? But when it comes to the human factor, I'm talking about identity. A lot of us here, I think there's quite a great thing that we still need to do, awareness, identity. If I take your identity, I can represent you on your payment platform, even your bank digitally. So how do this identity get into the wrong hand? It's us. Phishing, a lot of probably things that we do without having a notion that may affect us. If I ask in this room now, recently I asked my daughters, how many of you have an antivirus on your phone? So let me throw that question to us. How many of us here have an antivirus or an anti-malware, a paid anti-malware on our phone? Now, why am I asking this question? We go to the Play Store. We love a lot of apps, not so? A lot of apps. We can download them. Most of them help us to do our work and all this stuff. They help us graphically, but hidden behind those apps could be payload that will actually be taking your credential. Well, that would be a little bit more technical. How about the Mumu fraudster calling you? A lot of people in the rural areas may not be able to decipher this call. Somebody will call you mirroring as, oh, I am MTN, how do you call it? Support. Your this thing, did this, please. And people will oblige. And when you oblige, of course, definitely you are giving out your identity. Now, the recent one was just some few, I think years ago, I don't know how that is still happening. Now the guy kept on saying, I said, look, I don't know you. I'm not going to react to you. He said, oh, yes, I know. Then on my screen, something was popping up. So if I had mistakenly, maybe in anger, said this man, and I hit the screen, I've given away my credential because that's what he wanted me to do. So we should be a little bit more aware because I'm seeing a lot of human factor. Then on the bank side, of course, I know, I've just mentioned it, we should be very, very much interested in analyzing fraud. Every bank should have a fraud monitoring unit with the right tool in place to actually track patterns of transaction from legitimate customers and marry it with the fraudulent one. That is where the AI now comes in.
I wish I could add a little more to what Amen has also said. I actually had an experience with this. I wanted to find out what you would do when you realize that a customer went online, saw an ad requesting that if you want to actually travel, you can actually go through that platform. When you go through their platform and he will process your visa for you for free, he will get job for you and everything for free. And the time you realize he started chatting you on WhatsApp, asking you for your various informations. And I happened to even chance on one that I looked at. Even your email address the email address of the customer was shared with the fraudster. And that email address, what the fraudster did was that he used the email address and the password that was shared to actually set up what we call the Google SMS. There's a Google SMS on your phone. And then he mapped your phone, your phone with the email address to his machine, so that every SMS that the customer is receiving, the fraudster will also receive the same what's the name? The same message. So if it's set up on your banking app and the control the bank has put in place is to give you a two-factor authentication that comes through your SMS, the fraudster has seen it, so he can be like you. Because you have given your email address, you have given your password to them, so he has access to be able to, he has complete access to your bank account and everything. Because whatever channel the bank will reach you to make sure to verify that you are the one, you have actually given that access to the customer. It will be very difficult for the bank to also say they are protecting you in that regard, unless you inform them that this is what is happening. So these things is a two-way affair. One of them, the bank can look at it from the point of actually educating their customers that you need to take this precaution. We will not ask you for this. We will not do this. But you as the customer, you must also have in mind at the back of your mind that some information are sensitive to you. They are confidential to you. You cannot share it with any other person. Because if you do, the consequences will be the fact that they can actually get to your bank account and do whatever they want to do.
What I'm hearing here is situational awareness, as well as more awareness on the banking side. I think one thing we are all guilty of is that we do our awareness education in English, but majority of the Momo users, etc., they don't do English. So we'll add up on that. My second question.
Okay. Hello, I'm Solomon Atifo. I just have a simple question. How does one become a CISO? Because I might not look a bit, but I'm actually 19 years. I'm currently a cybersecurity intern at OOSEC. I've been joining international competitions, national competitions, and the cybersecurity stuff. This is a personal question, so
okay. So we will answer your question after. Connor MM. He will assist you with that one.
Thank you.
Yes.
Sorry, I'm going to take two. Is that okay? Okay, I'll take one. In 2026, what is the single measurable outcome you hold yourself accountable to that best represents the trust for your bank, and what target have you set for this year?
No, come again. Come again.
Basically, what are the set of targets or measurable goals you set for yourself for this year for your bank, so that there's trust in your services from a security standpoint? My second portion is more. Get the second portion.
Yes.
What is asking, he is asking, what is my strategy? So I don't think, well, in a nutshell, my strategy is to protect the customer, protect the bank, enhance the organizational business. And how do I do this? And enable business so that we will have a chunk of the market share. That is my responsibility as a CISO. But any other thing outside this, we can
That
discuss
is all
later.
our strategy. Thank you.
Okay. My name is Eugene Ampons. I have a quick question. But before then, it's interesting we're having this conversation because about an hour ago, I had a call from some scammer saying that, and then I saw a code pop up on my phone. But the Bank of Ghana has just a couple of weeks ago or days ago rolled out the virtual assets service providers legislation. It's been assented, but it's yet to come into publication. And I'm trying to assess, because you're industry experts, what you believe as a country our level of preparedness is to manage cyber and information security, in this new dynamic of cryptocurrencies and stable coins. Whether you think that, especially as financial sector players and as experts handling information and cybersecurity, whether you think that we are adequately prepared to handle the emerging risks that will come with this new regime. What do you think our level of preparedness is? Thank you.
1 minute to answer, please. No longer.
Okay, so let me attempt that. As we speak, yes, you are very correct. I think the act has been ascended. It's yet to be signed. As we speak, we have over 1 million or 3 million users. 3 million users. And we have over 100 providers, virtual asset service providers. Of course, definitely, the governance comes in. Everyone will be waiting for the act, but like I told my organization, the act will only zero in on accountability. Whatever it takes to protect that space is definitely on the bank. The cybersecurity directive, of course, definitely is embodied, has all those tenets buried in it. What is expected. They call it emerging technology. AI is there, virtual asset is there. So they have given us guidelines. Of course, the security architecture will actually change a little bit. Not so, because we'll be looking at protecting keys. That is all about crypto. If you lose the key, then the account will be empty. If the key is made public. So those are the things that we are going to actually center on. But whether it's a viable one, it's a great opportunity for Ghana, but it has to be done, it has to be managed. It has to be managed in a disciplinary manner so that we don't burn our finger. Of course, it's not everybody that you onboard in the space, because you really need to do a KYC, AML will come in there, and where funds are going to be generated from and all those stuff. So it's going to be a whole lot of risk assessment before you onboard a single provider.
Thank
so
you. Sorry, so we're so behind time. So I would like to just thank you. We'll come back to it. If you have questions, you can see them, you can follow up with them. They're here, but I do want to just try and keep us close to time that's already gone. So please give them a round of applause. Thank you so much. Oh, don't go. I have to give you your certificates. And while we are doing this, can I get Kenneth? Can I see a wave? Okay, so prepare yourself. I will call you in 30 seconds. All right, Sylvia, this is for you. Don't worry, you guys can do it. Set. This is for you. Thanks. So take a group picture. Yes. Okay. Thank you very much. All right. So yes. Give them another round of applause, please, as they go down. And then I would now like to invite Kenneth Ogwanye up. I am not sure I said that correctly. He's a group head of transaction banking for UBA. What we're going to do is we will take Kenneth, then we will take Gloria, then we will do the awards, and then when we end, you can grab your coffee outside. We will not take another coffee break because I think everybody is still relatively full, and that way we get to finish close to time. Welcome. Sure. Hello.
Okay, I'm told I have 15 minutes. I'll try and do that in less than 15, if that's possible. My name is Kenneth Ugwai. I think you got the surname very correctly. And I'll be speaking to embedded finance, what I think banks, fintechs need to do to unlock the next phase of growth in Africa. In terms of outline, where is can I use this now? Okay. In terms of outline, for example, I'll just look at some of these 5 topics, essentially trying to find out what exactly embedded finance is. Why now? Why is it an existential imperative for Africa and people within the payment industry in Africa to pay attention to this? We look at instant payments and how that influences the entire form factor called embedded finance. Look at payment data and also its importance, or data in its entirety, how it affects the next level of growth. And of course, look at wallets, different forms of wallets, the ones we commonly call electronic money wallets from telcos, as well as proprietary wallets and how they influence payments and embedded finance across all the different payment rails, so to speak. I was lucky the first time. I don't know what's going on now. Okay, so what's embedded finance? Again, it's just finance inside platforms. Before, you typically will go to a bank, have a bank check, for example, or a card to be able to transact business with a bank. Today, finance has gone, embedded finance has gone, or finance has gone to a different level when you see how customers are being served. So what it does is that embedded finance essentially integrates payments into all the other services like credit, insurance, for example, and brings it together in the form of a platform. Examples: digital lending, for example. You have a wallet today, and a bank is providing the balance sheet. Somebody is providing scoring, for example, and you're able to provide lending services to people who hold mobile money wallets. We look at insurance, for example. Payrolls and even remittances are terminating into mobile wallets and accounts directly from aggregators across the globe today. And then they become funding sources for financial services across different spectra of customers. We're looking at SMEs, for example. We also discussed that in more detail in terms of how they are able to access finance, because now embedded finance is coming into platforms as against products being usually orchestrated by banks. And so why now? First and foremost, we look at the demography of Africa. Today, we have a teeming young population who are paying differently from the way some of us used to pay in our time. They are digitally native, so they started from mobile first. The way they consume services is different from the way we consumed services those days. And that is why today banks, for example, are struggling with products and scaling their products, if you may. There is very massive adoption of wallets across Africa. Sub-Saharan Africa has grown. I think someone mentioned it in the earlier presentation. In terms of our growth trajectory, we have done better than any other part of the world in terms of how people are using and adopting wallets, and even how we are deploying wallets at scale. Then, of course, there is informal commerce. Massive amounts of payments are happening today on Twitter, on Instagram, and on Facebook that typically people are not tracking. If I take it a bit further, we mentioned stablecoins a few times here, especially when the Tunes team were presenting. Trade flows today in Sub-Saharan Africa, Ghana, Nigeria, for example, significant percentage is happening through stablecoins. And people are actually migrating into those rails because, again, they provide better and faster liquidity, especially when it comes to US dollars. Now, again, in terms of size, there's a credit layer, like I mentioned, there's an opportunity for over 300 billion in terms of SME financing that banks are not tapping into today that we could actually effectively deal with when we come to that. Then, of course, you look at wallet balances as a fundamental and a significant as a part of what I call bank deposits, which forms as part of banks' balance sheets these days. And again, those are greenfields because these are unbanked customers, essentially, who are now aggregating and then bringing them part into the core ecosystem, finance ecosystem, and then they are significantly affecting how liquidity is provided to banks. The next level, of course, is a bit sensitive. Sorry. Okay, this is where I was. So there's some kind of convergence, right, between bank accounts, wallets, fintech apps, and customers actually need to feel that in one journey. Let me give you a typical example. It might be a very quick example, but it's important that we pay attention to this. So people are moving money from their accounts and wallets, for example, are moving it into a proprietary wallet, and are staking sports betting, right? Significant volumes are actually migrating from that environment into those proprietary wallets, for example, and people are using it to stake and win, and then are also moving it back into fiat or e-money. The next level, of course, is that the customer actually, that token, for example, that wallet or that account, is the key thing that the customer needs. And it has to be just that one token that he needs to actually transact across all the different elements. I will tie this together in terms of how the data footprint that this customer produces now leads to the next level of service or embedded finance that the customer needs. So what's important here is that who owns the primary customer is becoming a very significant factor. And that is where the interplay between banks and electronic money issuers now comes into play. The backbone of all this is real-time payments. People need to make payments. It has to be easy. It has to be fast. It has to be instant. It has to be affordable. And there has to be trust underlying that entire ecosystem. So what's driving this process now is these real-time payment systems that are coming up. We are aware of GIPS and what GIPS has done in the payment space. We're also aware of NIPS in Nigeria, for example. Just recently, the Umwa region launched an interoperability platform that enables movement of money between accounts and wallets across the entire region in real time. So core to this is actually real-time payments. If we take it a notch further, we're also seeing the emergence of PAPs. perhaps is aggressively increasing their footprints and also building out products that cater not only to individuals, but also to corporates. When you look at the perhaps instant payment system as well as their liquidity marketplace, where they actually target all those areas. So real-time payments is critical in driving embedded finance and the opportunities that we'll find there. The next is interoperability. I've mentioned it in passing here and there, where, of course, standard, you're looking at bank to wallet, wallet to bank integrations, for example, then core interoperability ecosystems like Ghana was the first to do interoperability across board. And then we're also seeing, again, the ease of movement of funds between emerging form factors like stablecoin rails into fiat rails, where, of course, your normal on-ramp and off-ramp services provided by certain providers, though it's not clearly regulated now. However, we can't deny that that is happening at scale. So interoperability, of course, will determine, will actually help in that frictionless movement of customers between these different areas. Now, how do we're looking at fintechs, telcos, and banks. And the question is, what are the areas or where are the key battlegrounds between these contending parties, for example? We look at the merchant ecosystems. Wallets and banks and fintechs are competing for checkout. Let me double down on this. So today, for example, not when you go to a normal merchant store, for instance, you used to have options only on a POS. The only option we had before was to use a card to swipe. Today, we have mobile money on POS. And essentially, the next level in Nigeria, for example, you also have account-based payments on POS. So for a POS has a virtual account attached to it. And if you want to use accounts to make payments, for example, the only thing you needed to do was to just make a transfer from your account to the account number attached to that point of sale terminal, and then payment is consummated. Now, why is this important? By the time you look at those three methods, for example, mobile money, account-based payments, and cards, you will see that account-based payments gives the customer or the merchant, for example, instant payments, instant credit into the accounts, nothing like settlement. It's also cheaper. And there is no, like I mentioned, there is no delayed settlement for that customer. So again, payment methods. We're also seeing other wallets, other form factors coming through, especially in Africa, for example. Very recently, Google announced they were going to launch Google Pay in Nigeria in March this year. I'm sure it's going to extend to Ghana and other African countries as well. So these things are coming into place. Okay, I hope I'm doing well with time, but I'll soon be done. Yes, okay, so I'll soon be done. So again, if you look at those merchant ecosystem, QR-based payments, these are cheap methods of payments that are embedded in these payment methods, like I've mentioned, mobile money and bank accounts and cards, for example, and people are aggressively migrating into that. Let me double down again on this QR, for example. QR as acceptance methods can actually replace point of sale terminals. One POS can cost as high as $200. A decal where you have a QR on your table costs you near to nothing, just what you print. And once someone scans from that, you can actually be an acceptance solution for you. However, the next big thing, which is data, is that merchant data is now powering SME lending. I will mention I'm trying very hard not to mention brands, right? But there's a fintech in Nigeria today who processed over $1 trillion worth of transactions last year. Most of those transactions were lending. And they were lending at scale to SMEs who did not have any form of payment history. They just were collecting data at point of sale. With that and AI, they were able to analyze at scale, and we're actually offering loans to these SMEs ahead based on their transaction history, the transaction records that they have, and also the geolocating, locating that this is where this particular SME is. So you see a pharmacy chain that is being offered like 100 million naira in loans, without a single credit history. Just step back and know and check how long it will take that particular customer to get 100 million loan from a bank. The bank doesn't have data. Even the data they have, they are not using it. So you can see now where embedded finance is now providing some kind of comfort for SME customers. And I mentioned that ticket size is about 300 billion US dollars. So if this scales, you can see how embedded finance is going to come into there. In terms of the other battlegrounds, we're now looking at banking as a service. I'll double click on it towards the end. Banks will typically provide a license or the balance sheet. I'll give an example with this. Today, the amount of money that is being lent to mobile money users in Ghana and across different parts of Africa is massive. I can speak to it because I provide balance sheet for almost all the telcos across Africa. My bank has footprint in 20 countries. And that's my core job. Today, you see people who are pure lendtech. The bank provides the balance sheet and regulatory sponsorship, and the telco provides data. That tripod is what is now powering mobile money lending at scale. Different products. It can be overdrafts, airtime lending, for example, agent lending, merchant-based lending, but the volumes are crazy. And again, because it's data-driven, for example, when you look at how much, in terms of NPL ratios for those different tracks, you look at what a bank portfolio is and a traditional standard portfolio, there you see that their NPL ratio is very, very, very low because it's actually data-driven. Fintechs, of course, will do your normal UX, UI, experience-driven stuff, while the telcos, of course, provide the footprint that they actually own the network in terms of the distribution network as well. Then, again, it's actually deposit-driven, so. Okay. This essentially also, again, is just explaining what I've mentioned earlier than now, the roles of banks, fintechs, and telcos, and what essentially is going to define the growth or the scaling of embedded finance in Africa will be the nature of partnerships that these companies are going to go into. I've done this, so I won't do much in that space again. The next is, for me, is open finance and open banking. And this is where data, open data is going to, lead this change or this growth at scale. What that means is that, again, we provide what I call common standards or APIs, common API standards, like what you have in SEPA, a separate European payment area. That is their open banking framework, for example. And everybody, both fintechs and banks, can now come together. Banks provide the data, fintechs provide that UI, UX, user experience, and user interface that is more intuitive and innovative. And of course, based on the consent by owners of the data, which is the customer, they are able to enjoy services of both fintechs and banks at the same time. Okay, so in summary, what must banks get right? First of all, you have to make your balance sheet a platform. I just gave an example where I'm providing the capital and regulatory sponsorship. The telco is providing the data, for example, and then the lendtech is in the middle doing the scoring and managing that entire loan management cycle. Your architecture must be API first. And again, when we look at what banks do today, you can have a suite of APIs with which you integrate to third parties. Where we are headed, as far as embedded finance is concerned, is actually an open banking framework where there is standardization across board and all the different parties are able to, interface. You have to be interoperable by design. Again, open systems. You shouldn't be looking inward all the time. Then, of course, partnership will be the defining factor. Data is a strategic asset. Today, banks are not doing well at scale, but I can tell you for free that a lot of other participants in this ecosystem are doing a lot. What fintechs, of course, must monetize beyond payments. So in that same, I keep using that tripartite arrangement between banks, telcos, and fintech. Within that ecosystem, there's an income sharing formula that actually now gives the telco some money, which is actually, there is not a payment just because of their data, they're earning that. The lendtech is also earning something. Regulation is very key. And all your operations must be built around very strong regulations. Compliance is also a key component of this. And then you must lend with discipline because, again, two areas here, two core areas. Operational risk can kill you in one day. And again, if you lend without discretion, you're also going to burn your fingers. Okay, so this is the last slide. I can see you're very uncomfortable. Don't worry, I'm almost done. So in re-architecting this, we must look at partnerships as the core driver of scale. Those partnerships will drive transaction throughput, volume, and velocity across all the value chain. Try to own the interface. And again, the most important thing is that who owns the customer actually controls the economics. And I'm sure, I don't want to go into it, it's a very touchy issue. And again, if you're looking at embedded finance, you have to look beyond borders. Thank you very much. This will be the last slide.
Thank you very much, Kenneth. One moment. All right. So before you go, we need to appreciate you, of course. So you have to come to the middle. Thank you very much. Let's give him a round of applause. So now we know what embedded finance means. I did not know that term before. Thank you very much. So as we begin to close out the day, we have one last speaker. And I would like to invite Gloria Kabute Adodoaji up. She'll be talking about driving customer-centric innovation while managing risk. Let's give her a round of applause as she comes up. Thank you.
Thank you very much. Good afternoon, everyone. So I'm going to speak to us on driving customer-centric innovation while managing risk in banking. Okay, so I'm sure most of us know the saying, the customer is the most important visitor on our premise. He's not dependent on us. We are dependent on him. He's not an interruption of our work. He's the purpose of it. He is not an outsider to our business. He is a part of it. We are not doing him any favor by serving him. He's doing us a favor by giving us an opportunity to do so. And this was said by Mahatma Gandhi. So when you come to Bank of Ghana, we are looking at how Bank of Ghana looks at the customers that we serve. They are saying a customer is defined as any individual, group, or firm that uses, has used, or intends to use products or services provided by a financial service provider. And one of the things I found very interesting in their definition from Bank of Ghana is they define a customer as anyone who has actually just come to our bank to use our service. So they are not just looking at those whose accounts we own, but anyone who has stepped on our premises. So why must banks be customer-centric? When we look at our product offering, we must look at it from the point of view of the customer. We should not just decide that, okay, competition is doing this, and therefore I have to put the same thing into our books to attract new customers. A lot of the time, these initiatives fail. But if we look at our core customers, the businesses that we serve, and we speak to them and we engage them, we can then come up with products that will serve as increasing our bottom line. Now, failure by banks to introduce new offerings and process changes from a customer perspective results in a lot of customer dissatisfaction and account closure. Banks ultimately become profitable because they become the preferred choice for customer transactions. A lot of customers who do PR for banks go a long way as compared to the millions we spend using TV ads and radio ads and what have you. A satisfied customer becomes the greatest advertisement for banks, and their referral results in business continuity. Any bank looking at things from a customer's perspective actually has the customer knowing that they are respected and they are seen as the means to an end for the bank. Now, we went to Christian Rioma, CFA, who stated that a common misconception that a customer-centric approaches are softer on risk. This opposite is, however, true. Customer-centric lending improves risk management because it aligns financial structures with real cash flow dynamics, strengthens transparency between bank and clients, and fosters earlier engagements with business fundamentals. In a nutshell, any bank that looks at risk from a customer's perspective puts in solutions that customers don't see as a hindrance to whatever products offering we are giving them, but however, they see it as something that needs to be done to safeguard whatever resources that they have. So there must be a paradigm shift. Okay. Keeps rolling. Okay. So when it comes to managing risk, there must be a paradigm shift in product management, and we must make sure that we use data to design whatever we are doing. So in a nutshell, what I'm saying is that we can't just say, okay, the regulator is saying this, so we are doing this. But we look at the data that comes from our data or customer relationship management tools and use it to design a solution that we are certain will work, because the data that we are using to drive this proves that that is what the customers that are in our particular book. So what will happen in Bank A will definitely differ from what will happen in Bank B. Implementation of controls to mitigate risk must be from a problem-solving perspective and not from a perspective of just meeting certain regulatory requirements. Now, when it comes to loan offerings, banks must invest in CRM tools that will be tailored to the customer's needs. So sometimes we notice that we have a lot of defaults on certain product lines because we did not assess whether that particular loan type was aligned to the customer's business needs. Risk management tools and processes, while complying with regulatory standards, must have a customer-centered approach. Sometimes you go to certain places or you are talking to customers and you realize that the solutions that were put in place, for example, did not consider persons living with disability, did not consider persons who are outside the Ghanaian jurisdiction but have banks. But if all these are taken holistically, looking at the data of the customers we serve, we will not have these issues where we would end up having dissatisfied customers. Now, loan products features must align with the customer business cycle and account history and turnover to reduce loan defaults and diversion. And there must be room to accept alternative data when making loan approvals instead of sticking to what we have done in the past. So just to make it a little more interesting, I wanted to share the Zenith Bank story. Zenith Bank has three core things we stand on: people, technology, and service. And I remember when we started in 2006, so last year we were 20 years in the industry. It was a very difficult time because people did not believe that Nigerian banks could bring anything good. So what we did was to change the market dynamic by introducing early and extended banking hours. We put in place same-day accounts and same-day checkbook delivery. We introduced Saturday banking at that time, which was not heard of in the industry. And because of that, 2 years after we came onto the scene, we actually won Bank of the Year. Then we went on to also win the Customer Service Bank. And never a year goes by where we don't continue to win awards in this state. Then I spoke about products earlier on. So for the longest time, we had been known as a bank that always did corporate banking. And therefore, we were losing a lot of business from the SME side. So when we decided to go to SME, we didn't just decide that, okay, Bank A, Bank C, Bank D are doing SME. We decided to look at the customers we serve and find out from them how they felt we could serve them better. We administered questionnaires, we had stakeholder engagements, we engaged DFIs to help us with an objective and holistic approach on how best we could serve our SMEs. And based on what they told us, we now went to the drawing board with internal stakeholders to come up with our SME product offering, where we looked at products to support SMEs, we looked at products to support women, and we also looked at products that would meet green businesses. And we then incorporated risk processes that will go on to align with what our SMEs say. And this is one of our top selling products in the market. In conclusion, banks must never forget the adage that the customer is king in their bid and endeavor to become more profitable and relevant. The regulator must continue to champion the rights of customers through its circulars and directives that ensure that there is an even playing field in the Ghanaian banking environment. Banks must, as a matter of priority, invest in software and solutions that effectively manages risk with no inconvenience to the customer experience. And banks must consciously enter into collaboration and partnerships with fintechs and other service providers as customer retention tools, and also bring greater transparency to mitigate risk. Thank you very much.
Thank you so much, Gloria. Let's give her another round of applause. She did it in very short time. Don't go, let me just do this. Okay. Mr. Photographer, wherever. I think they've run away. Oh no, they're right here. Thank you very much. We are now about to do the awards, the final thing on the program. So while these gentlemen come and clear the stage, there was a question that, so I want to know, does anybody have any lingering questions? I'll take 1.5. You should get an award for asking the most questions. So 1, 2, okay. So I have 2 people, so ask them both at the same time, then we'll get the answers. 30 seconds each. You can take my mic. Oh, here.
I had a question for the speaker before the last. I recall that a couple of years ago, there was a conversation about MVNOs, mobile virtual network operation, and banks tried to take advantage of that. And at the time, the conversation about mobile money and fintechs taking over was rife. that conversation fizzled out somehow. I'm trying to find out from
He's over
From
there
him,
at that table.
whether the banks did something wrong. Do you think that we got too excited at the time and we're thinking about getting into the space, or we could have still done some business in that space so that we didn't get kicked out?
Thank you. So stay there. I'll come and meet you, and then you can come with your next question. And let me know who that question is for.
It's for you and the organizers.
Oh, it's for me.
Yes,
And
I
the
still
organizers,
remain where I was. That's what next after today when we go home, and 2027
What next?
when we come, what will happen? And those who are not in this room, our market women, those who are on the street actually doing something to build the economy, that didn't get the information that we've gotten today. How do we get it nationally for everyone who is not in this room?
Okay,
Thank
thank
you.
you very much. Give him a round of applause for that. Okay, Kenneth, where are you? Let me get you the microphone. I hope you remember the question.
Yes,
Okay.
I'll try to remember the question. So again, it's around MPLs and the way whether banks got it wrong or I don't know. Okay, mobile virtual network. Okay. I think mobile virtual networks had a problem of business model. And essentially because it was not profitable, most of the early investors in MNVs, all of them backed out. And it didn't work, as far as I'm concerned, just like CDMA. So it wasn't a profitable business model, and most of the people who invested in it actually didn't find it lucrative enough to begin to scale or to, or to do business in that direction. So that would be my response to that. Thank you.
Thank you very much. Okay, so the second question, Mohammed, yes, you can.
Yes, I'll take the second question. I think that's a very, very interesting question. In fact, that is something that I also think about a lot because as event organizers, we have a goal, right? And we have a vision, and we identify certain markets. For example, when we chose Ghana as a market of choice to do the first ever event by the International Center for Strategic Alliances, a lot went in. I'm pretty sure a lot of the bankers here remember MCR in 2018, minimum capital requirement, as a result of which a lot of banks merged with each other, a lot of banks had to shut down. That was our cue to choose Ghana as the region of choice, right? Now, we chose the region, we started the conversations in these rooms, and those conversations led to boardroom conversations. Most of the times, just to answer your question, we don't know what's happening either, right? We create a platform and of course hope that the conversations that start here lead to something meaningful, and then a year or two later we hear about results, and that makes us happy. But yes, for a certain organizations, like for example, if there is a fintech that has been interested in meeting a certain bank and we initiated that meeting, we try to follow up, keep us in the loop to see how it's progressing. So that is the extent we go to. But apart from that, I think your fellow delegates, the bankers that sit in the boardrooms and have those conversations are responsible for the actual change. The event organizers will only bring all of you in the room and make the conversations happen. Thank you for asking that question.
Thank you very much, Mohammed. So we will now move to the awards, and we will go down the list. So the first.
Thank you, Gillian.
The first award is for excellence in cash management.
All right, so just a little bit about the Innovation and Excellence Awards. It's written in your brochures. one thing that has kept this, the show going for all these years is especially this segment, the Innovation and Excellence Awards. Rewards to those people that have done really, really good. And it's also an inspiration to those that aspire to do well. So it sets the leaders apart and, of course, inspires the followers to be the leaders of tomorrow. So I think the first category, excellence in cash management. May I please request Sarah from Azensho to come up on the stage to give away an award, please. Please give it a big round of applause for Sarah.
Let's read it. And the award goes to Standard Chartered Bank.
Woo! Can we get the representatives from StanChart to make their way up?
Please give it a big round of applause for Standard Chartered.
Oh, we can do better than that because you two will be called up here at some
Please.
point, we hope. So everybody smile.
Everybody smile for the picture.
Thank you very much. So
thank you, Sarah.
Okay, here we go. What we'll do is, for the future groups, you will come on this side and you will exit on that side so we can keep it going. All right, the next one that we have is for excellence in banking services.
Excellence in banking service. Excellence in banking service. And may I please request Mr. Alex Forson to join us on stage to give away the award. Please give it a big round of applause for Alex Forson. Excellence in banking services.
Okay, and the award goes to FBN Bank, Ghana.
Please give it a big round of applause to FBN Bank, Ghana.
Is anyone here from FBN
Do we have
Bank?
anybody from FBN? First Bank, Nigeria. She'll receive the award
Yes?
on their
No?
behalf.
Okay.
I'll take this.
We will accept it in absentia. All right. Thank you. So Alex is accepting it on
Thank
behalf
you,
of
Alex.
them. The next one is for excellence in private banking.
All right, excellence in private banking. Any guesses? It's an award show. Let's make it live. Any guesses? All right. Please give it a big round of applause for Stanbic Bank Ghana. Stanbic Bank Ghana for excellence in private banking.
Anyone from Stanbic?
Nobody. All right. Well,
okay, I think they're all gone. So moving on. And we're moving to excellence in commercial banking.
Excellence in commercial banking. Excellence in commercial banking. May I please request Mr. Emmanuel Morka to join us on stage to give away this award. Please give it a big round of applause for Emmanuel Morka. Excellence in commercial banking. Excellence in commercial banking.
And the award goes to Fidelity Bank.
Please give it a big round of applause for Fidelity Bank. Do we have Fidelity in the room?
We had them earlier. Not sure where they are now, so the award will be accepted on their behalf. Or is there someone coming? No? Yes? No? No. Okay. All right. So moving on, we now have excellence in corporate banking.
Excellence in corporate banking. Any guesses? Excellence in corporate banking. No? Excellence in corporate banking, very famous in the whole continent.
I hear a stand chart. That's what he said.
Yeah, but that's global. Please give it a big round of applause to ABSA CIB.
All right.
Do we have ABSA CIB?
Well done to ABSA. We've got the ABSA team coming forward.
Team ABSA.
Looking very sharp.
Congratulations.
Woo. Well done. Come on up. Congratulations.
Congratulations.
Excellence in corporate banking.
This way.
So you can exit to the other side. Next, we have excellence in investment banking.
Excellence in investment banking. Excellence in investment banking. Please give it a big round of applause for Societe Generale Ghana for excellence in investment banking.
Well done, well done.
Oh, we have George Adjebank from Societe Generale.
All right. Oh, let's give him a round of applause. Congratulations. All right, thank you. Next, we move to outstanding leadership in banking.
Wow. Outstanding Leadership in Banking Award. And the award goes to Republic Bank Ghana. Please give it a big round of applause to Republic Bank Ghana. Nope? All right.
All right. Awesome. So again, we're accepting the award on their behalf.
Thank you.
And we now move to excellence in customer experience.
Wow, that's excellence in customer experience. Any guesses? Wow.
Are you sure?
And are you from Calbank? Well, may I request Lorinda to come on stage and give away the award, please? If you could announce the winner
of excellence in customer service.
All right. Lorinda will announce the award.
She's coming to present.
Mike. And the winner is?
The winner is us, Calbank PLC. So I'm giving the award to myself.
Please give it a big round of applause to Calbank for excellence in customer experience.
Yes, well done, Calbank.
Very well done.
You know yourself. Well done, congratulations. And as you can see, the whole team was here ready because they knew.
Here. Let me take the mic.
Congratulations. Right. Oh, go to the middle.
This way. Yeah.
Let's give them a round of applause. Well done, Team CalBank. Okay, next we move to
Congratulations.
excellence in data security.
Excellence in data security. Any guesses? No? Please give it a big round of applause to Zenith Bank Ghana for excellence in data security.
Team
Excellence
Zenith,
in
well
data
done.
security. Oh, we have the CISO here. Please give it a big round of applause for Zenith Bank for excellence in data security. Congratulations.
Congratulations, Team Zenith.
Congratulations.
All right, next we have excellence in banking innovation.
Excellence in banking innovation. And the award goes to Consolidated Bank of Ghana, CBG. Please give it a big round of applause for CBG for excellence in banking innovation.
Well
Clap,
done.
people, we're done for the day.
Team CBG. Guys, let's support them as they come up. Keep the clapping going. Thank you. Thank you.
Congratulations.
That was excellence in banking
Innovation.
Congratulations.
Congratulations.
Okay, you can go to that side. Thank you. So next we have excellence in digital innovation.
May I please invite Alexei Trefilov on stage to give away the award for excellence in digital innovation. Excellence in digital innovation. Mike, just a moment. You open this and you will winner. Excellence in digital innovation.
First National Bank Ghana.
First National Bank Ghana. Please give it a big round of applause for FBN Ghana. FNB Ghana, sorry. First National Bank. FNB.
Looks like you'll have to accept it on their
All
behalf.
right, we will accept on their behalf. You'll give this award. Thank you.
Next, we move to excellence in consumer banking.
Excellence in consumer banking. And any guesses? Nope. Any guesses? And the award goes to Prudential Bank. Please give it a big round of applause to Prudential Bank for excellence in consumer banking. Do we have Prudential Bank?
Team Prudential. No.
Team
like,
Prudential Bank. No.
I know they were going to try and come back, but looks like they didn't make it, so we'll move ahead. Okay.
All right.
All right. So next,
category.
we have excellence in retail banking.
Excellence in retail banking. And the award goes to Excellence in Retail Banking, and the award goes to GCB Bank Limited. Please give it a big round of applause for GCB Bank.
Team GCB, come on up.
Ghana Commercial Bank. Thank you, Ranjan.
And that was for excellence in retail banking. Careful.
Congratulations.
Mohammed, wait 1 moment.
Yes.
Awesome, thank you. Next, we move to excellence in SME banking.
Excellence in SME banking. Any guesses? We're going to go after this. We're done for day. Let us have the last bit of your energy. And the award goes to, the category is Excellence in SME Banking, and the award goes to Universal Merchant Bank. Please give it a big round of applause to UMB.
Anyone from Team
Anybody
UMB?
from Team Universal Merchant Bank?
All right.
All right. Let's move on to the next category.
Next is excellence in financial inclusion.
Excellence in financial inclusion. This bank must be already 3.0. Excellence in financial inclusion, and the award goes to Access Bank Ghana. Please give it a big round of applause to Access Bank Ghana for excellence in financial inclusion.
Well done. Oh, let's clap for them. Let's keep clapping. Careful. Congratulations. You can move to the middle.
Congratulations. Congratulations.
Well done. Well done.
Congratulations.
Next.
This way, yeah.
Okay. Next, we'll move to Best Bank for ESG.
Best Bank for ESG. May I please request Lorinda to join us on stage once again to announce the award for Best Bank in ESG. Best Bank for ESG.
So, and the winner is UBA Ghana Limited.
Please give it a big round of applause to UBA Ghana for Best Bank for ESG.
Let's give them a round of applause as they come all the way from the back to the front.
Please give it a big round of applause to UBA Ghana. Congratulations, ladies.
Wonderful. Thank you so much.
Thank you,
Next,
Lorinda. Thank you.
we move to excellence in e-banking.
Excellence in e-banking. And the award goes to Omni Basic Bank. Please give it a big round of applause for OmniBIC for excellence in e-banking. All right, moving on to the next category.
We are down to the last four, starting with Best Bank in Ghana.
Okay, that's a tough one. Best bank in Ghana. Any guesses? So clearly Stanchart doesn't think it is the best, yeah? Best bank in Ghana. Any guesses? Axis Bank does not think it is. And the award goes to EcoBank Ghana. Please give it a big round of applause for EcoBank Ghana for the best bank in Ghana,
Well
2026.
Team EcoBank. Team EcoBank, where are all the ladies? Congratulations.
Congratulations
Watch out for
to
the
the
cables,
best bank in
please.
Ghana. Congratulations. There you go. I think second year in a row, right? Congratulations.
All right. We now move to Chief Information Security Officer of the Year, the CISO of the Year.
Chief Information Security Officer of the Year. That is CISO of the Year. Hands down, one of the oldest and the most effective CISOs I've personally known in the Ghanaian market. Please give it a big round of applause to Omo for Chief Information Security Officer of the Year.
Well done.
Congratulations, Very, very well deserved. Congratulations.
Let's give him a round of applause. Thank
Yes,
you.
please give him a
thank
round of
you.
applause.
Congratulations. Now we move to CIO of the Year.
Chief Information Officer of the Year. Chief Information Officer of the Year. Please give it a big round of applause to Emmanuel Morka for CIO of the Year award.
Congratulations.
Please give it a big round of applause for
Oh,
Emmanuel.
let's hear the applause.
Yes.
Well done, well done.
Emmanuel has consistently been winning this award across in Thailand and several other countries around the world. Congratulations, Emmanuel, once again. I think the last one was Egypt.
Congratulations.
once again,
And last, but certainly not least.
No, I have one more.
Oh, you have one more. Okay. Second to last. CEO of the Year.
All right, so there was one award that we announced, and the winner was not here. Excellence in Consumer Banking. Excellence in Consumer Banking, and the winner is Prudential Bank Limited. Please give it a big round of applause for Prudential Bank. We have Leopold from Prudential Bank, the CIO, joining us. Please give him a big round of applause. Congratulations. Congrats. Yeah, congratulations. Thank you. All right. So,
CEO?
Chief Executive Officer of the Year. Any guesses? This would be the last time you're guessing tonight. Do you think your CEO is the best? Best CEO of the year, please. What's Axis Bank CEO's name? Just say the name. Any guesses? No? All right, please give it a big round of applause for Daniel Asejo for the best CEO of the year.
Congratulations.
Congratulations. Anybody from the bank? Congratulations. Jillian, you will accept it on behalf of the CEO of the year?
Sure.
Now that you are one.
Thank you very much. Congratulations to him. And I believe that brings us to the end of the awards. And so, next on the agenda, two things: chairperson's closing remarks and then vote of thanks. Here are the chairperson's closing remarks. Thank you for being with us today. Thank you for staying with us the entire day. We hope you got something from it. We hope that next year, 2027, will not find us here just talking and looking at each other and looking at paper. I hope that next year, indeed, someone will be able to stand up and say, look at what I did between last year and this year. Because if you remember this morning, I said, change is constant. And so what is the risk? Anyone remember? Exactly. We cannot afford to stand still. So thank you very much for being with us today. I will turn it over to Mohammed for the vote of thanks. Thank you.
Thank you, Jillian. Thank you for truly making this day a very beautiful one. Please, if you could, yes. All right, with that, of course, this part of the day I don't really like that much. We, as event organizers, we go through a lot in terms of organizing this event. For months together, a huge team works on organizing this. But this particular event was even more special because it was the 25th edition of the Connected Banking Summit. Ghana, of course, remains special for us. The first country for the event to happen from Ghana Digital Banking Summit. You all know the story. I don't want to repeat that again. But that being said, today was very, very special. Thank you so much to each and everybody that was a part of the event. And a lot of you have been here since morning. And like I said at the beginning of the day, it's not easy for a head of a department or a manager, a CIO, CTO, CISO to leave their office to be at a conference hall. I don't know, to learn, to network with the folks in the industry, or for whatever may be the reason. You've been here all day, and I would like to take this opportunity to personally say thank you for being here. Thanks to all the speakers that really shared really good content, insights, success stories that I personally, for one, take a lot of learning back with me. And most importantly, of course, the sponsors. I'd like to take this opportunity to thank Azensho, Bricks 365, Prudential Bank, Tunes, and Fidelity Bank, without whom we cannot imagine this day happening. So thank you so much. And of course, next year, 2027, February again, we will most definitely see you. Thank you to each and everybody present in the room. I would like all of you to applaud for all of you for being here and making this day happen. Thank you so much. May I also request all the winners to join us on stage, actually everybody to join us on stage for a group picture.
And once that is done, the final coffee break is outside, so help yourself to refreshments as you head home for the day. Thank you very much.
Please, if you all can join us on stage. Done. Thank you.
I want to say that I'm very sure so that they will see me.
May I please request everybody to join us on stage, please? ऊपर आ जाओ। Everybody, please. That's good. Oh. Yeah. We're good? Thank you. Please, let's help ourselves to coffee.